Good morning, everyone. Happy Friday. Today is May 26, 9 a.m. Eastern Time. This is Rose. You're in the Brooks Trade Room. I will be covering this morning's live session until noon, and then Brad Wolf will join us and take care of the rest of the afternoon and close the week for you guys. So don't sign off at noon, or if you take a break, come back, as we will continue the live session into the bell. Okay, so let's begin. Last couple of days, I traded on my own, but I was in the trade room watching and following the commentary from our team members. So it's been a good week so far. I want to start with the weekly chart real quickly. We are still advancing high, and the bears got no decent bear pressure here. However, we do have what seems like a head and shoulder patterns that bears might be seeing here, but you could see that this is a channeling up. And I do have a possible wedge top forming, and the bulls might be wanting to get to this level, but really this has always been my target and a measured move target to the upsides. So I want to see bulls actually close this month as bullish as possible. We are almost done with this month, but we have another week. So June 1st is going to be next week, Thursday. So we have another week to go, but it's the end of the week. So we will get some decent moves today, possible volatility, some. It's not the end of the month, so expect some swings as bulls are trying to reach certain levels like last week's high, low, mid levels, or monthly levels, so and so. So you can see that we have been going sideways for some time. There is a spike and there's a quick pullback. We tested that, made a double bottom there, and then went up. Remember, this is a weekly. Each bar is a week long. And then we have up on this, down, up on this, down, this, up on this. If this is still a bull flag and the bulls are still trying to break out and get to the, above 4,200, it's a round number. It's always been a magnet. We've been testing it, and somehow getting rejection here. But I think this is where the bulls are trying to go. Bears are looking for a trap here, and they want to get back and take out these lows and get a measured move to the downsides. But so far it's sideways price action, and we'll see. We tested and somehow trapped the bears trying to sell here, and bulls trying to get above last week's high and get some kind of a measured move to the upside. Think of this as maybe higher low, but I don't know if they're going to be able to do so because daily doesn't look all that good for bulls. Here's your daily chart. We have been in this expanding triangle. We tested the highs. You can even say, hey, I'm going to take this high. We had a fake breakout and it came back down, made a new low. You can even actually do this. So if we cannot maintain our position above the apex is down here, we've come down pretty strong here. I mean, this was a sell-off right here in the May 19th, and we're pulling back up. So if this area does not hold, bears are probably looking for another leg down. And the reason why they're looking for a leg down, they have been stuck here, and they have not been able to exit out, right? So they try to sell here, fail short, and they were never able to get out of their shorts. So they kept selling these highs, and they finally might have gotten some kind of a break even, but their original entry is here. So they want to see market come down and test the May 4 high. Bulls, on the other hand, both above here, both the close, and even stuck up here. They're disappointed, but look what's happening here. If you are a bull, you're stuck up here, and you buy at the low. Okay, so maybe it's somewhere here, or the close. Since the close of this day, prior day, right around here, look, they've gotten a break even right there, but is this good enough? Bulls want to get back up to this level. Bears want a lower high. They see that the bulls are not able to get to here. This is where they bought, and you can see that this high did not reach that high, and that's the problem. So some who bought the close may be breaking even here if they're smart. Some who bought one tick above is maybe even bought right up here. Definitely stuck, but even those guys got to break even. If they have gotten out and there are no more bulls in the market, we could sell, we could come back down to this level. There's a gap here that the market wants to close. So we might actually come down here and bounce. And if we sell in the morning and then bounce, okay, so this area and this area is going to play a resistance, and we could come back down again. So I don't know how the bears are going to fare here. They definitely want to bring the market down and exit out and test this high. So this is a 50 SMA acting as support at the moment. I do have this inside outside. Inside, market went sideways, and bulls trapped the bears trying to sell here. And then you can see that they closed this bar, failed to sell again, right? And then went up and reached their targets, coming back down. I want to check something. Okay, so we made a new low there. That is not an inside bar. So I can still use this range. We come back inside this range. Midpoint of this range is important. You can see that this is the apex. We went into this balance zone, and we're bouncing. Are we going to be able to get back up and make a double top lower high? 1, 2, 3 wedge, maybe double top lower high, and then come back down from there? If the bulls take over in the beginning of the session, we could still go high, but that's because there are gaps here, and they know that a bunch of bulls are stuck here. So, but as long as we do not close above this level or get above this level, we're not going to be able to advance higher. So we are right now 41.6650. So that is right down here. We are way below. So you can see that we can actually continue to come down to here. And if we start to breach that, market will want to get back here, test that, and this is going to be my target, which happens to be right above May 4th. So you can see how bears wanting to get back to this midpoint, get below that and keep selling and selling and selling, and then close this gap. If they fail to close this gap, meaning they cannot overlap a bar with the close the open of May 4, okay, so we could still bounce there towards the end of the day. So we might get a swing, who knows. But we'll see. I'm going to be watching this level as 5-minute chart advances today. Okay. I know there are a lot of lines there. Let me get rid of that. We don't need that. Okay, so hourly chart. This is last week's range, so I'm taking the low and the high and the midpoint. We breached and trapped the bears trying to sell. Okay, so now why did this happen? When you hold on, let me get my. When you see a structure like this, okay, generates a projected move up, which is your measured move. Okay, so when market sells, that's buyers where market started to buy to get this breakout and measured move will act as another strong buy zone. Okay, so this buy zone is, you cannot assume that this is going to keep selling. It might go up and then sell, but you could see none of this moving averages acted as resistance, and the bulls bought it. So this was a good swing, but we do have 1, 2, 3, or 1 pullback, 2 pullback, and 3. So we might go back and make a double top. Since this is a bull channel, bulls are going to try to fade all the pullbacks, okay, selling or breaking that lower trend line, and most likely we will test this area is resistance. Now if that acts as a resistance and we make a double top lower high, that becomes a flag. So I would assume market is going to come down here first, and we're going to bounce and then make another flag and then come down. Now there is a structural low here. If we break that, because there are stops here, okay, market makers want to run those stops. They couldn't run here. They couldn't run those stops. But if they start to run, next pullback will sell. And then we end up going down all the way to this trend line. So this is what the bears want. They want to bring the market down to here, to here, to here, possibly here. So that would be a lot of sell. I don't know if that's going to happen right now. There's a wedge. We need to test the high and then come down. Okay, so what if we make a new high? Well, there are gaps there. There's a breakout test area on the hourly. That is kind of important. Okay, we might actually go there and actually make a new wedge, right? So 1, 2, 3, and then come down. But if that's the case, if we cannot sell and this area holds, we can even go all the way up here. I'm not sure about that. I think bulls kind of lost their chance here big time. You can see that we did not even reach. We fell short here. So we got 1, 2, 3. We might actually reach here if we can take out this apex. So the bears need to show me that they want to sell, but first they need to trap the bulls. So now, where can we trap the bulls? If we keep going higher, we might thoroughly test above this EMA, which is a 50 EMA. Once we test that, there's gap here. That could actually act as resistance and send the price back down. We might end up making 1 pullback, 2 pullback, 3 wedged up, and then a lower high, and then we might come down. We'll see how this goes. So is critical area going sideways, maybe, and then up or down. Right now, this is resistance. 50 EMA is resistance. I like to see bulls actually thoroughly test above it and then come down, or test it as a support and use it as a support and go and close this gap and then threaten this gap right here. And then we would end up going back up to last week's high. On the I went to town with charting this 15-minute Globex. I want to talk about yesterday. So this was yesterday. You could see the bull flag right there. So we came back down and tested and made another higher low. Okay, so at the open yesterday okay, let's see here. Where's that? 9:30. Right, so we came down, we made a double bottom higher low, 1, 2, 3 wedge, bull flag, and then bull showed up. Now, because it was a trading range, it's difficult, right? You always expect some kind of a leg in a trading range before getting or expecting any kind of breakout. So we went up here. This is a very strong bear bar. Okay, several bear bars. So evidence says if there are 2 legs of bears, where that strong bear move started is going to be a strong sell zone when price gets there. Here's a leg 1, here's a leg 2, and failed. Bears got trapped at these lows, right? So market goes back up. But the problem here is that bears actually take out that structure, but fail to go lower. So even if we go higher, right? So because bears took out even this structure and then that structure, they're looking for a sell. They want to swing. This right here was their swing attempt from that sell zone. And then it comes down here. But look, this is a strong structural breakout. Strong structural breakout twice. So evidence says that if you want to swing, wait for this area to be tested for the second time. Look for a bull bar buy above it, right? So you have, let's say, a leg here. That's your measured move. The only problem that we did not meet that measured move. Okay, so now that's one way to measure. I like to be conservative. I like to actually take that. That would be my measured move. Now, why did I exclude part of that wick? Is because this is a leg pullback. This is the bar right here, breaking that structure. Where that it breaks, okay, so you can see if anyone was selling here, they put their stops. Their stops are ran right there. and then this bar took out those stops, always go for a conservative one. Is take profit, unload some of your contracts, and then get the largest one. Maybe you can take that and take that, and see if your runner can run there. If it doesn't run, you can always exit out. Okay, so this way you are minimizing the risk of market reversing back. And in fact, it didn't go there. So it's always, look at where these bull bars are breaking. Is if you were a bear, right? So you maybe sold this close, you're selling here again and not able to break even. Or maybe you did break even. Well, let's take a look. If you are bear, you sold. Why would you want to sell at the supports? But some will do. So they sold, right? So, or they sold above this bull bar. They were disappointed and they were trying to break. But I'm going to measure from here. And you sold the close of that bear bar. So you barely made it. Barely made it. And in fact, you couldn't even touch the break even. That's a failure. When this kind of failure happens, bears are going to sell higher. But their stops are here. Bulls know it. Now there's a failure in the stops. They run those stops with a big bull bar with a gap. That is why I measure where that stops ran above. Okay. And then maybe I can take that. Right. So hold on. That. Where the bulls started to sell. I'm sorry, buy. That is my measure move right there. Okay, so that's how I measure it. Anyway, so as market goes up and then comes back down again, it's a trading range. When you're in a trading range and the market has been spending a lot of time, even if it's breaking out but coming back to the midpoint, maybe down here again. If there's a breakout, expect pullback. Okay, so that's exactly what happened. 50% of that held. We rallied again. So let's take a look. We are at the high of the Globex range. Is market wants to break is above the Globex range. We have resistance above. I do have a angled channel here, which is also a trading range. We got rejected there, came back in. Bottom of the channel is holding. Is if we can break out from the Globex, that's going to be my target. If we get a rally, we might actually reach here, but we'll see how this goes. It's resistance here, so we might reach. Bulls want to reach this prior high, and they want to test, so we can then get 1, 2, 3 wedged up. It is possible that we might actually push all the way. Maybe even here there's a congested area, some kind of a triangle there. Okay, breakout, attracting the price. That's why I marked it. Bulls want to get up here. So somewhere between 41.90 to 41.95, which is right here, I marked. We could end up going and then sell. Because we sold there very strong, chances are we're going to be able to get minimum 10 points, possible 20 to 30 points. Pull back. It is possible. So we'll see if we can actually break this. And if we can break this area, okay, so but there's this breakout test, so we're probably going to test the high if we can push. But the pullback holds at the top of that channel, then we go to the extension. Okay, so this is your projected move basically. Okay, this is half of that. We could go there, come back down, use these areas, and then we might actually reach it. That becomes a measured move target for bulls if they can break above the Globex. So that's my bullish setup. For bears, if we get any kind of rejection here, 1, 2, 3 wedge, double top rejection, then I'm going to look for price to get back down below that, start closing bear bars. Double top midpoint is I want to see bear bars closing here, taking out that midpoint, making a lower high, bear flags, and these are going to be my targets for bears. But we are at the high, so is higher probability market is going to try to break above. I do have a trend line here, which comes from is this expanding triangle is projecting to the downside. It actually got a 2-to-1. I think it's 2-to-1. I do not know. But let's see. That's 1-to-1. That's 2-to-1. Okay, so bears is reached and then reversed, went back there, got a rejection, went back again. Bears want to use this as a rejection and then sell into these areas. I've got buyers waiting here. But the bulls want to take out this trend line, get back into this balance zone area of interest. Look how much the market spent time there. It wants to get back here. Can they do that? Yeah, they might be able to. Let me extend this to the right. And if they do that, this is going to be my measured move to the upside. Okay, so that, I did that terribly. So this is just a guesstimation. I don't know, but since this is the structure, I might be able to take that as, and that would bring us back to the 4,200. So again, I think it looks better for bulls than bears, but on the daily, on the higher time frame, it looks different because bears are stuck above the May 4th. So we might actually come down. Okay, so let's take a look at the 5-minute chart. Okay, so I did some good swing trades yesterday, and I'm going to mark those for you. You can see that week's midpoint, and I'm taking that from the RTA chart, acted as resistance. We have no consecutive bull bars closing above that line, that black line. Okay. So what do we got here? All right, so the bears have a strong bar 1. They need 2 bars to create bear trend at the open. One of them at least has to close on its mid-level or on its low, So both of them close really nicely. The only problem here is that I expected an overlap with the bar 74 body. We failed there, so the bulls try to get back up inside bar 3. Some actually bought above it. I would not have. If I'm going to do something there, I will never buy above that bar 3 high. Instead, I will actually sell because you're a bear disappointed, you're looking for a second leg. Bar 4 is the second leg, but disappointment. Okay, we are still not overlapping there, but and bulls are trying to keep that gap open. They're putting some bull pressure there, but to me, this is a wedge bear flag. First, it was a double top bear flag, failed, so I'm looking for a third push, and that's it. You can actually start the swing underneath 8. The only problem here is that we did not take out that, okay? So basically, this is still presenting problem. It could still be support. So if you're swinging, you want to take profit here at the prior low or that high. Because if we do not, okay, start to close bear bars, your swing will die because the bulls want to keep this, okay, open. And we need some kind of a double bottom. At the EMA, bulls are looking for a double bottom because they have gapped up, came down. We are not really always in short. We have been always in long since the day before. The only problem that presents for bulls is that 5-minute EMA being at the below the 1-hour EMA. So some traders will consider this as always in shorts, and they're looking to swing. But bars are close to one another, and some point they were parallel. So what are you going to do? Market is going to bet against, strong bull bars gapping up above the EMA, most likely, right? So they did. So the bears sold again. This was their next attempt. So you could say this is actually the second leg, and it completely trapped at the EMA. Okay, so we are overlapping, but we only have a 1 bear bar 11, okay, is overlapping. We have no consecutive bear bars. So, and we did not move underneath the EMA, then you get this bar is, so if you are bullish, right, so you have maybe first entry, second entry. The only problem is that we made a new low there. So to me, this is the first entry. I'm looking for a second entry. We go, you see, it goes down, pulls back, 14 goes above 13. That's your second entry. Is if you didn't have a buy stop order there, and I would understand why you wouldn't have it, because it's sideways markets and you do not want to buy with a stop order. But we do have gaps here or void. Okay, so it's a sign bulls are putting some pressure in the market. You can always buy above it. Okay, so you go high. Other swing bulls actually started to enter right there, right? So you have maybe down on this, I'm sorry, down on this, up on this, down on this, up on this, and down on this. You got a wedge bottom right there. Failed flag is strong bull bar signal 12, telling you you can put a buy order right above it, and it's going to sweep you in. And if you are taking out the stops, first stop's taken out here, next stop's there. So we know market is going to go here, and it's going to try to get a 1-to-1 target at the minimum. You get a beautiful bar 14, structural breakout, body breakout. That's your 1-to-1 right there. Okay, so, or you could say, hey, I want to measure from here. Okay, so that's my 1-to-1, but did we get 2-to-1? That's the question. Just about. Now, why didn't we get above? Why didn't we reach here? Why couldn't we test here? Well, it's sideways, it's trading range, and I said it's important, and even Al said it, I think. You have a trading range here. Sellers are waiting here. Evidence is set. Evidence says a 2-legged move, 3-legged move. Sellers waiting here. This is your bar. Take that as a range, right? So measure it upper 1/3. So measure it upper 1/3. Upper 1/3. That you can't see, so let me change that one more time. Here we go. Upper 1/3 right there. Okay, so sellers are waiting there. You can guesstimate where they are, or take the entire trading range, right? Edge to edge, you're at the upper 1/3, and you are not going to go further high. Plus, bulls want to get above the open of the day, but the bears trying to prevent it. So they think of this as, you know, an area where they can sell. But now, bears are not really thinking of selling. Bulls are still in the swing. When would they start to take profit? Bears are only going to start to think of selling as they wait for bulls to take profit. That's generally 10-point, 20-point swing tests, right? So if you can measure, there's not much of a distance here. If you can measure from here to there, market already reached 20 points, and it's extending. So do you have a bull bar above 21.75 to get to the 30 and 40 point? No. And no bulls started to take profit yet, so they have to take profit. And I actually warned in the trade room on Discord members, you really need to take profit here. It's not only it's the top of the trading range, the bulls have not yet started to take profit, and we're overreaching, and we're testing, we're extending as much as we can the 20-point swing. But 20-point swing, that's a house trend. You have to think, oh, profit taking, and this bar happened. Everyone was like, what is going on? Well, we knew profit taking was going to happen. If you actually get your boundaries, you're also at the top of the trading range. Sellers are eagerly waiting. In fact, I can apply another template, which now I have each trading range midpoints are identified, that black line, that black line, that black line. I don't have consecutive bull bars closing above the midpoint of upper range. So profit taking will begin. Doesn't matter what you do, you have to read the signs. 22 sells, bears are trying to swing. You can swing underneath 24. You're looking for, again, 10 to 20 point swing. Since bulls were able to make that, bears probably going to make that as well. and that's your 20-point swing average, even in a trading range is. And then the bulls take over, right? So we have a higher low, bull flag, maybe a wedge, higher low, bull flag, maybe truncated wedge, and we're going to go high. We have structural breakout, another one right here. Okay, that's your 1-to-1. Possible is 2-to-1, right? So you can actually be a little bit conservative. That will be your 2-to-1. Okay, so another flag, another final flag. Okay, so we go up, test, and then come down. 1, 2, 3 wedge, and a double top lower high. You can start the swing underneath bar 60. Is you're looking for a 10 to 20 point. Okay, so how much did the bulls made here? They couldn't even get a 9, 10 points. So swing measured from here, bears get another 20 point, even a little bit more. Or you can say this was too bullish, I don't want to take this wick. I'm going to measure from here. That's fine, but then it would be wrong because you don't have a full 20. So where did they start to sell? I generally take the mid half of that wick, and you can see they actually reached 20 point. Anyway, so is higher low. This time is market 5-minute EMA moved above 1 hour EMA. So market is still always in long. They're buying the pullbacks, but unfortunately we have a trading range lasted more than 40 bars. You have to expect price to come down here. Half of that trading range will act, midpoint of that trading range will act as is support. So you can either take just the bodies there, but since we don't have too long wicks, just take it edge to edge. So we come down and we bounce. 1 hour EMA acts as support. We didn't have to come all the way down here because this is the buy zone, the last bear bar before the impulsive move began with 2 legs up. We tested that as supports. First buy entry, you're looking for a second buy entry, and the bull swing, wedge 1, 2, 3, double top lower high, bulls start to take profit, and there's bears trying to reverse it. But we opened up in a trading range now, and we're at the high of the trading range. Bulls are still trying to break out from the Globex high. We might need to go and test that 50 EMA on the hourly. So bulls still trying to take out that yesterday's high and take out the gap. They're still trying to get back above here. Maybe the close of this bullish day or the high can they keep pushing this? I think they will try here. So we might get a measured move here. High of yesterday is magnet, which is bar 55 high. If we take out that with a bull bar, open of the month is going to be your magnet is April high. Also magnet bulls are still going. Now, let's see, as far as the news goes, durable goods orders, international trading goods came out, personal income outlet came out 8:30. We might be getting some kind of reaction to that. Wholesale inventories also came out. Retail inventories all came out. Consumer sentiment scheduled at 10. So less than half an hour. That's going to be a big one. So we need to pay attention to that. What happens if we cannot close above these high of yesterday? Well, that can act as a double top resistance. There's also already a wedge here, 1, 2, 3. So I think the bulls, since we're so close to a major magnet, open of the month, high, close, last month's high, last month's low. These are important levels. Okay, so let's see. Big bull bar, but it's testing this trading range high, and it's got an upper wick. It might actually scare the bulls a little bit, but it's a really good bull bar. because it's the high, is machines had an attempt to sell there, but bulls really need to fill that upper wick with a bull body to start a trend from the open and to close a second bull bar. Bulls are still stuck. They're trying to close. Remember how I measured earlier on this one? If you're stuck here and you boat maybe down here, close of that, you're still at the break even. If bulls can get above it, they might continue higher. But suddenly we get trapped at the high of yesterday's, okay? We could start to sell also. So decision will be made soon whether the bulls are going to stay in the market and they're going to try to get high and test this day's low, which is 41.90.75. I like to see bulls actually take the market to 90 to 95 area and then come down from there. But we're still in first leg in a pullback, but the bears want to start the second leg. So this is a very critical area right here. I'll leave that for a minute on the charts just to see what we're going to do here. Five-minute. This was the 8:30 news, came out and created, but look what's happening here. Market is getting above. By the way, this came from here. I posted this several times and I said, if we cannot get above this, we're going to sell. Now this trend line was a magnet, which we reached, and report kind of pushed us down, but look, bulls have been taking out that structure, so this area is now a swing spot for bulls, and they tested it, so now they're using it as a support. Where are they trying to go? One might ask. All right, so here, back to here. Let's see. Can I get that? No. I need to change that. Bulls want to swing there. Sellers waiting there. That happens to be 90 to 95 I talked about. Okay? I mean, I put this haphazardly. It could be a little bit like that. Okay, so, and 90. Take that. Okay, so that's where we're going, I think. I posted this early on. So we reached the channel high. As I said, that's going to be a target for bulls on the Globex. Now, you can pay yourself a little bit, but I think the market is going to try to shoot up here. Maybe even up to here. This is where I want to see bulls take us. But because it's the channel high, it's an objective, I want to see the 50 EMA thoroughly tested, and I want to see the high tested before we trap the bulls, if that's what they want. Otherwise, we're going to keep pushing higher into this area. Trend line, bears want to trap the bulls and have a wedge top, but two bull bars, you're getting a measured move here, right? You can measure from there. That's your measured move target. It's, yeah, trend began. We're trying to get to the 41.85. I'm sorry, 82, and then possibly open of the month and maybe 85. Good bullish move. We're probably going to fare all the way up to 41.90, 91 area, or as early as 41.85. Open of the month is, we might get some rejection there. So market is trying to go higher. 82 is measured move. Here we are. We also reached a trend line. Open of the month is magnet. I want to see 41.85 tested, but sellers are above. So just be aware. We might come back down very quickly if we get a good sell signal bar. I don't know that yet. So I just scalped there, just in case. Open of the month is we are going to pull back. Bulls trying to get a 40 point out of this move, so they want to reach 41.95.50. They might continue to go higher. Okay, they might. You can also say this is my measured move, and I want to see continuation. I won't blame you, but this is resistance here. Bar is too big. It might try to go higher, but I took profit because I know the behavior. If they keep going, I'll buy again, but right now I paid myself here. Next, they're going to try to reach 41.90. This is where your runner comes in. But you should be paying yourself here no matter what. Okay, so the continuation up, we might continue, and we probably will. I did say that we're probably going to test this resistance, Globex, the top of that resistance, and I said this is the 25% extension of this channel's breakout. They're trying to reach the 50%, which is right there. It's a little above 50 is major objective. So market is also trying to reach the 66% upper range of last week's high. Okay, I'm sorry, upper range of last week's range. Sorry, that's a mouthful, but that's what I mean. This is your last week range. If you divide it into 3 sections, if you're on the fence on using Fibonacci levels, then divide it into 3 sections. Use them. You don't need to use Fibonacci levels. That's why I have it there. This is where they're trying to reach. A little bit more room to the upside. So let's see. 41.90 to 94.95 area. I think the bulls trying to reach. This trend from the open, beautiful. Is you can also have by using 3 bars have your measured move. That is the measured move, 41.90. So many different ways to measure. You can take the 3 bars breakouts. You can take the structural breakout. You can take a swing measured move. So continuation, but it will take profit there. So good job. We're getting a follow through right now. Breakout follow through is breakout for bar 2 is follow through big bar. So it's trying to reach places. Here's a structural measured move. Here's a 3 bar measured move. And I think the target is still 41.90, 41.91 area. And for trend bulls, they're already, now why are they stalling? Because they reached the 30 point. After 20 point, they reached the 30 point, so they're taking profit there. But the machines they don't look at anything else. Structures or 3 bars or none of that. What they're doing is measuring the trend, half trend, and full trend, and they want their full trend target at 40 point, which happens to be is right around 95. Okay, so we're probably gonna they're gonna push towards here. That's what they're gonna do. So that is 95.50, which is slightly above April high. But first, its resistance here is they're taking profit. Big bar is, I think, that body of bar 3 is the biggest one in this leg. And it's good for the bulls because they're stuck up here. They're trying to reach all the way to here. This gives them a lot more better average price. And you see what just happened here? We went above that break even. This is good for the bulls. especially if they start, they want to test right here, right there, okay? They want to close the gap, but gap's a gap, okay? If a bear gap stays open, and if they see weakness there, but this is no weak bull bar, this is still pushing, so it's 41.91 target, furthermore up target, but gap is still open. They have to overlap with this bar, okay? They have, if they want to get up to this level, they have to get above this level, fill this area with a bull body, and overlap right there. Then they can get to here. If this area stays open, we could still come down. But this is good for the bulls, definitely. Okay. We have not reached any of these measured move targets yet, so give them a little bit more room here. A little more room to the upside. I don't know if they're going to be able to make it. If this bar closes bearish like this, it's going to scare some of the bulls. They might start to take profit underneath only if the bar closes bearish. Right now, you don't need to worry about it. I took profit on flat just in case. I told you guys. I want to see a continuation bar. If this bar closes bullish, I might be interested in buying once again. And the target will be 41.91 to 95 area. Open of the month is a major magnet. I had to pay myself there. It would be nice if we can get another bull bar here. Room to the upside. That trend line is holding, but it is wedge. Okay, so if we close that bear bar underneath, many bulls are going to be panicking and wanting to exit out maybe a 1 point below 4 or right underneath 4. Now I don't know. I don't want to sell against this, but it's a tight bull channel. Makes it difficult. Now what you can do here, which we did this exercise in Discord yesterday, is with several here bars, you can measure what's the average S&P profit, trader's profit, 1 point. So it's a 5 ticks. If they're able to move beyond that, since ATR is 5.75, 5 points and 3/4, half of that is 2 points and half or something like that. So expect 225, get a 2 point average scalp from this, okay? So there are sell orders now. These bulls some of them already scalping. And other bears are jumping in because they want to get a 2 point scalp here. But not only they might get a 2 point, they can actually get a 4 point scalp too. But right now they're testing 1. Look, I marked it. They haven't even touched it yet. Now, how would you know this is failing and it's going to go back up and take those highs, or at least go back up and test the highs? If the bears cannot get that average 1 point, it's always a 1 point. It's important. It's a sign of whether or not market is reversing or is it starting. 1 point. But some might laugh, but that's the rule, okay, for S&P. But since ATR, we have volatility here, ATR is over 5, you should expect 2 points, so that's 225. But we haven't even touched the 125. So there's no solid 1 point scalp from underneath 4. If this bar closes bullish, that's going to be problematic for anyone who sold underneath 4. Okay, so what they're going to do is they're going to try to sell up here to get a break even. Bulls know that, and they're going to try to target the high. So it's very important. This is why I don't like to sell underneath these first bear bars I see. I want to see a second bear bar, second entry sell. That's better trader's equation, right? So, but if you really want to jump in, then you can do the exercise and see, are the bears making 1 point? They're still struggling. Well, there's last 2 minutes left, or 2.5. Maybe they can accelerate and get that, and they should. But if they can't, that's a big, big sign saying that there are no bears in the market selling this. It's just the scared bulls taking some profit and then realizing, wait, we didn't really have to get out of our long because no one sold here. It was nothing but a 1 or 2 point scalp. Market is going to continue to go higher, right? So this is where I don't mess with it because this is all machines. I sit back and remember what Al says, second entries. Okay, better trader equations. Don't jump in with the first one. We're at the 30 point. If you look at the opens, I look at the ETH manja. Okay, I measure, so they're taking profit at the 30 point. Okay, so they're expecting, they want a 5 to 6 point move down and a close beyond 5 point, which is 6 point, and then get a 10 point counter trend and end this bullish trend. But if they fail, then the market is going to try to get to the 40 point. So it's not over for bulls yet. And you can see the struggle. If bears were in the market jumping in, they would have already taken that 1 point. Where is that 1 point? If it's that difficult to get a 1 point scalp underneath 4, how bearish is this? It may not be, I don't know. Yeah, I agree with Barkley here, although he's trading NQ, but they kind of move similar. I used to put the RTH NQ and RTH ES, my old job, side by side, even YM. You're going to get the same RTH setup on the NQ. I used to take trades on both charts together. See what happened there? It's a total failure. So now bears sold underneath, discouraged. They're going to sell above this bar, but who's going to sell above bar 5? Right? I won't. They might sell up here. They're looking for break even. Right? So now you know what to look for. It's one of the reasons why I switched to Ninja. I was able to measure faster. Now, can bears, they're selling because they're disappointed, right? So if you sell maybe the 50% and maybe you sold underneath here, so this is your break even. But if it fails, right, and takes out the high, that means bears not getting any break even. That could be catastrophic for bears. Oh, by the way, so Verizon came in yesterday, and they changed the box. They changed some cables outside, and they meaning one person, and fixed everything. My internet is now 1 gig. Although he argued with me that I definitely don't need it, even with streaming. I could have just used 100. Okay, speed. So it's because his son, his 18-year-old son, is a day trader, and he uses 100, and he streams and everything. So I don't know if he actually streams or he jumps in a stream and listens. I don't think if you're 18-year-old, I don't think you're streaming, but you might be listening. So I don't understand. I don't know if he understands the difference, why I'm struggling, and I needed higher, faster internet. So we had a little bit of talk, and he was so proud of his 18-year-old trader son, and apparently he likes, watches and fast cars and old designer clothes. Well, listen, that's good. If he's making money, that means he's buying stuff. That's good, as long as he's not writing on the credit card, right? Right, racking up the credit card bills. But apparently he's doing very well, and that kind of made me smile. I love it. People should learn trading young age. They should be, those extracurricular activities in high school. They should be a lessons. They should be like stay after school kind of thing. They should teach trading. I'm sure kids would stay. I would have. It was sewing for me. I'm not signing up for that. Mom was trying to sign me up. No, absolutely no. I went to play basketball and volleyball instead. I am not sewing anything. Not me. They're 6-year-old. Wow. That's young, but he's going to do great. I mean, she's going to do great. All right. I'm still waiting for 10 o'clock, and this is why we're kind of going sideways. I think they got their break even. So if you sold here originally and then sold again there, maybe, or, sold at the close, even that, but that hasn't reached a break even yet. Needs to. I'm sorry, I'm doing this all wrong because the area is so small. I'm having a hard time. They did reach their break even. So here we go. Their back is, they're trying to, I measured it wrong. Here, that's the measure, break even. All right, so now they're making money. Is what's happening here. Anybody sold here? That's 225 right there. Even went 2 ticks below. So that's a 2-point scalp right there. So these bears went for 2 point, got the 2 point, but they had to fix here. So that's good, but if they close this bar bearish, it could become the second entry short. But that bar needs to close somewhere down here. If it doesn't, then it's going to be a wedge up on this, down on this, up on this, down on this, up on this, final down. And this could be a small wedge and go higher. Okay, so it's news. So anything is possible. Okay, so consumer sentiment just came out. We'll still have targets up above. Now for bears, can they continue to sell? Well, do we have a bear bar closing below here? No, then we're not going to go down to 10. So bull trend resumes. Okay, bulls are still trying to get to the targets above. Okay, so 91 to 95 area. Measured move, this one's done. That was structural. Here's a 3 bar. We're about to get that too. 91 above, we might actually test. Let's see if they can make it. But I want to point out, and I want to knock on wood, I think I'm good, I'm not behind. It's news hour, and have you guys noticed, I'm not behind. My data is not behind, so it's doing pretty good, just knock on wood. So no lagging, no nothing. I'll take this. And I load it up. I have this workspace with so many charts. I have NQs, YM, you name it. I have hourly. I load it up. So far, so good. Just to test it. Don't want to jinx myself, but all right, so we met the target, measured move. I like to see bulls actually close above a bull bar and continue to go higher. Okay, so 91 to 95, maybe even 96 area. This area is still target. Look what we reached. This is the channel extension, 50% we reach. It's and right on the dot. It's no joke. It's no coincidence. I did point that out for you. I said we're probably going to test the 66%, and that's an objective. We might come down from there, so these bulls are taking profit. Goal is to close above it and continue to go higher. We need to overlap. So this is the gap that bulls want to close. They're trying to reach 41.91. Okay, so but we are testing above the 50 EMA on the 1 hour, and I said we need to thoroughly test it before we even have an attempt to come down, and that's happening right now. Bulls need to close a bull bar here. Above is bar 5. if they want to continue to go higher. Now, can the bears show up here and bring us all the way down to 41.7250, or the high of, let me see if I can show you. In this bar, there were sellers here. Can we get up to here, this level? Well, buyers are here waiting. Be careful, because this area, buyer is waiting. Look what we just tested. We tested my resistance, but this is where I want to see tested. So I expect more bullishness. Bulls need to close above bar 4 high with a bull body to continue to go higher, because what this is an expanding triangle. Therefore, it is a bull flag. Okay, so we have a bull flag here. Market wants to keep pushing higher. There's a bar gap in here. Let me measure that one, which I didn't measure, but well, we met that target. That doesn't make any difference there. Let's open another one. Ugh. Was that 4-4? It was, wasn't it? Or? It was, wasn't it? Oh, I messed that up one. Shoot. I think that was April 4 high. Looking for continuation. Bar 7 didn't really close above 4, but it's still a strong close. So first entry, maybe second entry, some bulls are still pushing. 90 to 91 is still target. If they can close a bull bar, take out the upper wick of bar 7 with a bull body, or at least close it somewhere up here, then I would expect 41.95 area to be tested. But if they fail right here, we might come back down, but we would need another push. 1, 2, 3 wedge and this is spike, this is pullback. We're making a channel up. Okay, so before we come down and test these lows, we still need to go make a high and then come down, test here. I would look for a double bottom and continuation up. On the daily, 41.91 breakout test area, bulls are pushing for it. We're still in the pullback. Second leg has not yet started for bears. So 41.91 is a big deal. We made a new high, so I can't really think of selling just yet, but it's not a breakout. So if you buy this and you put your stop underneath 6, it could be dangerous. Okay, so you want to see a bull close. So better if the bar 8 actually closes at the high of 7. That's momentum. Actually closes at the high of 7. That's momentum. Market wants to test 41.95. But any failure to take out the high of 7, we could come down, only to go back up again. Yep, it's forming wedge. It's a channel. It's a bull flag channel. Basically, market is buying the high 1 closes, so that means it's bullish. It's not even looking for a high 2. That means bullish pressure, and they're trying to reach places. 95.50, guys, big deal. This is where it's trying to reach. This right here. And we could continue. This is the measured move for the channel. We could even get there, but this is what I'm interested. Now, we do not need to stop at 95.50. Open of the week is magnet. Okay, this April high. Okay, so we can get another 5 to 10 points above 95.50. Don't be surprised. This is really good. Bull trend here with market buying the high ones. So keep pushing. There's a very nice strength bar here. It actually took out the bar 7 high. So there's a small measured move. That's the breakout point. Stops ran, right? Market actually reached there if it wants to. Okay. So I'm not going to sell this bar. It's testing the breakout point before getting a follow through. 41.95 is where I want to see tested at the minimum, and furthermore up to 96.75, 97, 98 area maybe. I would say 97 maybe at best if it can reach. I'm not picky. I'll take the 95.50. But it is resistance on the higher time frame, which I marked for you. So if you start to take profit here, I wouldn't. This bar is going to probably get continuation on the hourly. Bulls are eyeing this gap. They want to close this gap. But we're at a breakout test area, so most likely they will take profit. Okay. I like to see 95.50 tested, and it will. Nice bull move at the open. You got 2 bull bars. Taking out the high you got a measured move target. I don't know why. Did I remove that? Even this one, 99.50 is although a better job there. 99 is your measured move. But oh yeah, I didn't measure this one. I measured this one. Right, so we already reached that. Now that we also reached. Now the bigger structure I would say, is definitely. In fact, might even this. So 4200 magnet happens to be only 5 points from the 40-point zone. So we could reach there. But if we cannot get a 6 point, that means we're not going to get a 10 point from 95.50. That means we're not going to get a 15 or 20, and then we could come down. But this to me looking good and is kind of logical, because when market moves about 40 points, especially if there's volatility, hence ATR is more than 5 points, it could drift another 5-6 points and then fail and come down. So until that happens, you don't want to exit out of your long. It's like you're on a highway and suddenly there's an accident and you're kind of skidding, right? And you're trying to stop. So that's that. Because we're going fast, okay volatility is most likely we might actually breach 95.50 and might get up here. And we'll see. I'm more interested in 95.50 and then furthermore up to 96.75 or 97 area. If we have a deep pullback, lower 1/3 of the breakout bar, 8 buyers are waiting. Okay, so which is around here, but we're at the breakout test area. There are a bunch of bears sold here, so it's trying to reach here. That will be your deep pullback. Buyers are waiting here, and if the bear bar closes or tests but closes one tick above, minimum one tick above this 87.50, and it could open a bull bar and the bulls can go higher. They're trying to reach here because bears are stuck. They try to sell with 2 legs. Remember, they were stuck. Some of them didn't exit out, even though they got a 2 point there. Underneath, selling underneath 4, but that's all they got. Some are still selling maybe, I don't know how many points, maybe 5 points above. Yeah, so they sold 5 points above. They're trying to reach here. We got a bunch of bull gaps open. Market wants to keep this bull gap open. Okay, so if you actually go to line, look at the gap, right? So they want to continue. See, another bull bar. So now those bears are going to try to sell 10 point above. That's that drift. Still going. But it's a micro double bottom, 8 and 9. So some bears already putting their sell stop orders underneath 9, hoping that's the neckline, and they're going to get filled and make money because market wants to test. Bears want 4 high to be tested, but I wouldn't sell against this, especially if this bar closes on its side. But if it closes lower, now you have an outside bar, inside bar, 8 and 9. There could be trappers above bar 8, okay, wanting to trap the bulls and send it back to the midpoint of bar 8, and then bears want to test the low of bar 8, but the buyers will be waiting at the low of bar 8. Okay, so I would not sell against this. Target is 95.50 still, so hold. But you see, I said there are trap bears waiting to trap, so they're trying. But I think at this point selling 10 point above 4, bears might end up waiting. We'll see. If the bar closes bearish, then you know it's definitely trying to come down to the midpoint of 8 and then reach the 4 high. But it's probably buyers there also. We did not reach my target. Is not even 1 point below. I am not selling this. It's going to try to go higher, at least a little bit more, unless bears prove me that we're not going to be able to reach this 40 point and we come down. Not likely at all. We should get that 40 point. We're so close to it. At least test 94.50s. I'm okay with that too. But the April high is, if I measured it right, I think is 94.75. So nothing there, just a little bit more room to the upside. We made a new high, so that's no longer a micro double top. We should continue to go higher. Even if we do come down at the midpoint of bar 8, buyers waiting. Here we are. We're almost there. Could drift another 5 points. Is from 95.50. The upside. It's not really overbought yet. By the way, there's no such thing overbought or is oversold. Market could stay overbought days or oversold days. So how does your indicator fare then? It doesn't. You just count the points. Here we go. Target met, yay. And then we're now trying to go maybe another 5 points, but I don't know. This is where I would pay myself. Next is 96.75. Let's see if we can get that. I think we came 1 tick close. Yeah. It's still a bull bar. 35 seconds left. Should go and test. Let's see if they can. If they fail, we could quickly pull back to the high of bar 8. And if we do come down, bar 8 midpoint could act as support and look. It could look for buyers there. But right now they're still pushing. So if we close a bull bar here, not only this is my target, but let's see, 97.50 to 98.25 is my target. Okay, so measured move right there. Pullback buyers at the breakout level, high of 8 or 9. That's where the limit bulls are sitting, waiting, wanting to buy the pullback. Market could continue. I mean, it doesn't really need to stop here. It could go to 42.10. Okay, is right there. Is the target above open of the week. It's getting a little bit, high is right here on the 1 hour. It's trying to reach here. It's trying to close this gap, so it's trying to overlap with that line right there. But really good job, bulls. They're trying to reach is on the daily. I get rid of this here. Either the close or the high. Okay, so we reached that. What did I say? 97? Yeah. Yeah. So I said 97. We reached. I mean, it could still drift. It's pretty strong bullish, but this is what I paid myself. I said 97. I don't know if this is 97.50. Yeah, 97.50 to 98.50 is targets. We're testing 97.50. You should hold this and pay yourself at 98.50. Kind of a front run is before the measured move. But you can, if you pay yourself here, you should hold a runner into here, maybe even here or here. Could go higher, but it's a bit resistance on the hourly chart. And most likely bulls will buy the next pullback. Always in long, obviously. It was also a cup pullback handle. We're getting a measured move on these 15-minute chart, and that is the target, give or take, 42.05. There will be profit taken at 98.50 or 98.25 as early, but it could continue higher. It's getting a little bit nosebleed here, too high. Bulls trying to put another 5 point from that is 95.50 to see if they can actually close a 6 point bull bar and get a 10 point above 95. So I'm sorry, 95.50. So that would put you into 2005. 42.0550 is 42.0550 would become is your next target. Only if they add a 6 points above 95.50. So is 0150, okay, is 0150, 42.0150 is where the bulls want to close above. If they get that, then expect more bullishness. So that's still the measured move. Anybody sold this and didn't exit out and you're hurting? Is there anyone short here and adding to the losers? I'm not asking to muck you. I'm trying to see what we can do to help you. Okay, so you exited out then? Okay, good. You sold 6. Okay, so, and then you exit out. That's good. Good job there. This is a very climactic move. We might get a deep pullback, but buyers will be there. We got a magnet there. You blew your account. Oh no, I'm so sorry. Oh, even it is, you lost your fee there. So is maybe do yourself a favor, don't sign up, okay, for a new account. Get a little bit more practice in sim, bud, okay, and then think of it. Right. So there's plenty of time to become better. By the way, these kind of opens, like you have this gap going on from bar 20 bar gap to the EMA is, so most likely we're going to get that 20 bar gap. Even if we pull back, bull's going to maintain that 20 bar gap and then come back, and the buyer's probably wanting to buy it. The problem here is that we're gapping up way too fast, and then the average price is down here. If we're too high, it's because we're trying to reach somewhere. There's a gap here, market is trying to close. Therefore, they're trying to overlap with bar 81. Let me mark that. Can you guys hear other people talking in the background? Did you hear anything? Okay, good. Thank you. Sometimes it could be the voices in your head, some dude. I'm gonna go with the consensus here. All right. So they're trying to overlap with that. So the next resistance is 4206 to 4208.50. So from here, and that's coming from here. Okay, market is trying to reach this area. A little bit more now. And the next pullback is we will come down because we are just too far from the EMA. But we may not touch the EMA. Okay, so maybe pull back to here. But if the gap is still open, this area, watch out. You really want to pay yourself somewhere here, closer to 4206 area. One contract. I trade those kind of accounts, but I trade. Yesterday I did one contract trading. I did phenomenal. Think of this way: I have really large accounts with them, but the thing is that I don't think of it as hey, that's buying power. No, that's not it. That's fixed power. I'm fixing. Your job is to be able to make money with one contract. If you're not able to do that, then you have no business trading somebody else's account. Somebody else's money. You're not ready. Just say that to yourself. Make your peace. Go back and learn. And anytime you have a large account, multiple contracts, that's not that you can go in and buy and sell with multiple contracts. That's if you run into any issues, it gives you an ammunition power to fix your bad trade. Okay? That's how I look at it. I don't abuse those contracts. When I started to trade that way, I were able to actually manage these accounts and get faster withdrawals. That's the key. Remember, you're not trading your account. You're not that flexible. Okay, so this is excellent. We are overlapping with that day's close, but this is the target which I measured for you. Let's see if we can get there. Sellers are definitely waiting there. We reached the measured move targets from the Globex. Way too big. Probably going to get some drift to these. Look, where can we go? There was a trap zone which sold. What the bulls want, they want to breach this trap zone, test these highs, and then keep buying into here and here. Can today continue to go higher? This is it. This is the next target. I don't know. It's a big bar. Might get continuation. The new hour begins. Bulls are still trying to reach the close of this bullish day or one tick above, which they entered and got stuck. So this bullishness is phenomenal, but It will come back a little bit, but don't assume it'll sell unless some kind of a news come out. I don't know what's scheduled. I don't think there's anything else in the afternoon. Yeah. But you see, they're taking profit there already. Why? Because if you measure from the 95.50, that 40 point, that's a 10-point profit. So bulls moved, market additional 10 points are paying themselves here. Could come down to 175 or 4200 area looking for buyers again. We need to pull back a little bit, look for buyers maybe above bar 11, lower 1/3 of bar 12. If this bar closes bearish, it's going to accelerate profit taking. So I'm looking for market to pull back to the lower 1/3 of bar 12. Buyers waiting there. Okay. So you should have taken profit here, no matter what. We knew this was resistance. It could still go higher. It just needs to take profit a little bit here. But we don't know if the sellers are going to show up here. Actual sellers. They're watching this bar now. They're looking to see how much of a profit taken, how accelerated it is, to see if they can jump in and bring the market all the way down to bar 11 high. But it may not happen at all. So there is a debt ceiling thing going on still. We have not reached any agreement. I don't know what they're going to do over the weekend. But we have a little bit more to the upside. But I think we're going to eventually come down. Let me see, where can we come down? We could come down to 41.94. Buyers early buyers around at the lower 1/3 of bar 12, but we could come down a little bit more and maybe test the 98.50 to 97.50 area maybe. So let's see if not the best sell signal bar here, 13 but it can generate scare. Okay, so, but it is not the best bear close. It's a profit-taking bar, basically. Look at the way the bar opened, the bear bar opened right at the close of a bull bar. You can see, let's see if we can get a little bit more. Bears want to test the low of 13. There might be sellers, sell orders there, looking for 1 or 2 point scalp to the downside. But it's a terrible close, this bar, and no one seems to want to sell. But I like to see a pullback here. So I'm done buying, by the way, unless I see the high taken out once again. But it should try to sell at least twice here. Here's the first sell signal bar, 13. We might get a second one before we go back up again. But if they breach that 13 high, then we continue to go higher. But I doubt it. I think we're going to come down. Now, anybody who sold is disappointed. They might try to sell again. On the hourly, we have a little bit more space to the upside. Is 42.10 area or 10.75. Bulls trying to take out the high. Oh, they did actually. Okay, so they took out the high. They're still trying to go higher. So this ended up becoming a quick profit taken, failed body. I did warn you, it's terrible close. So they might actually continue. It's trying to become a continuation signal bar. But let's see if they can get the 09.75, maybe even 10.75. Bulls are trying to get a continuation because the big bar It wants to get continuation up to here, where I marked with that red arrow. And then on the hourly, we have target right there. So the bulls are still pushing. So 975 and 1075. Maybe we can breach and then trap and then come back. Or if this bar now closes, then you get two bars, but none of this is an inside bar because 14 went one tick above 13. To me, this is continuation. But I did say anybody who sold here with 13, selling again and trying to get a break even. Other bears want the low is tested, the 13 low. Bulls want to continue. They have a little bit more room to the upside. 1050, 1075, I think. Yeah, 1050, not 75. And then the 975. A little bit more room to the upside, if my math is correct here with that target. But it's getting, it really is, you know, small pullback bull trend, climactic. It's not really small, to be honest. These bars are big. This is a really climactic bull trend, but it has to take profit. So up on this, down on this, up on this, quickly down and up. So you do have actually a climactic wedge top there. Market is going to want to come down, possibly to 98.25 area. See if they can make it. Maybe a little bit lower. Bears looking for a second entry short here, or first entry, I should say, is if you don't count this because we made a new low, new high. Are they going to be able to get it? I don't know. If this bar closes, takes out the 14 low, then some bulls will accelerate profit taken and exit out. Otherwise, it's still bullish. I would like to see a pullback to 4,200 and look for buyers, or a little bit further down to 41.98.25 area. There's nothing to sell here yet. We made a new high, so and 14. Some bears got a break even there because they sold here break even, so now they're looking for continuation. But if we fail to take out the bar 14 high, are we taking it out? Oh wait, oh yeah, we just did. So then continuation into that target right there. Okay. Well, it's still bullish, so it's trying to reach this new target, 42.16. This is done. This will probably going to act as support now. Maybe even here. We might even reach here. So this is the on the hourly, 42.13.50. Okay, so nothing to sell. We took out the 14. That didn't end up becoming an inside bear bar, so it's continuation. But it has to come down. It has to take some profit here because it is now a 15-point swing. It's trying to reach 20-point, brand new 20-point, which starts around 1450 to 1550 area. So it could go to 1450 to 1550. I'm going to mark the 1550, which is closer to my 16 target. So bulls are trying to get a 20-point here. brand new. Oh yeah, Brett probably said that. Let it go. Let it go. Well, there you go. So we are at the 15 point. They didn't take profit at the 15 point, but that's what they have. Let me see. Nope. So this is going to take profit. It has to come down a little bit. It has to come down a little bit. Very nice move for bulls, but it's actually trying to reach 4220 area. Oh no. Okay, I think I crashed my. Can you guys? I'm gonna turn this off and try to fix it. Okay, hang on. Yeah, I crashed it. Totally crashed. So I don't know why that happened. Just give me a second, please. Because I'm in a trade here. I will activate the screen in a minute. Just give me a second. Oh no. Okay, I think I crashed my. Can you guys? I'm gonna turn this off and try to fix it. Okay, hang on. Yeah, I crashed it. Totally crashed. So I don't know why that happened. Just give me a second, please. Because I'm in a trade here. I will activate the screen in a minute. Just give me a second. If this bar closes, bar 15 closes, is bearish. Profit taking can accelerate a little bit. We could come down to that level I marked, 98, I think. I don't know if we're going to be that lucky. Bar 12, lower 1/3 is also target, or 4201.50, 4201 area. Probably early buyers. We might breach a little bit down, because bar 15 is a good sell signal bar, kind of. So we might actually get some sellers underneath or profit takers. So we might reach the 4200, 4201, and then the 4200, maybe even 4198. I'm just about to activate my screen. Just give me a second, please. They're taking profit for sure. Why is this taking so long? Just give me a second. Hang on, everyone. I'm in a trade, and I'm trying to fix. I'm making money. Okay, that's good. I better take profit here. Hold on. Ooh. Oh, no, of course. Right before I take profit, it just bounces. Hold on. Target is for bears. It's around 4202.75 to 4201.75. I don't know if they're going to be able to make it down there, but I couldn't scalp that early. Okay, so here we go. Get that. It's kind of small pullback bull trend. Bulls are buying at the low of bear bars, and still trying to continue higher, but it's a good sell signal bar. I think that's bar 15. Yeah, it is. So some sellers disappointed underneath because they couldn't. I don't know if they could able to make a 1 point there. 475, so 450 needed to go to 325. Nope. So they didn't make a 1 point there. That's kind of disappointment, and they're probably going to sell up here one more time. I like to see bears bring the market down to 0150 or 0275. I'm sorry, 0275 or 0175. Still very bullish. Bulls still got their eye on 42.20 area, but they're going to have to take out the bar 15 high. Sellers underneath bar 15 disappointed. They might look to sell at the midpoint of this upper wick right around here to get a break even. But suddenly this bar closes bearish. We could accelerate down to 0275 to 0175 very quickly. Bit of a nosebleed here. We reached a major objective open of the week. Today's Friday. This isn't going to be sustainable. This isn't going to keep going on and on and on and on. It has to pull back somehow to 20 EMA, and we will touch 20 EMA. Okay, so we will always, 90% of the time, I think it's even higher probability, we will. This is a 20 bar gapping right now. Okay, we might come back a little bit only to go back up again, and sometime after 20 bars, we will reach and the buyers will be present at these 20 EMA. Yeah, and they will probably gonna buy the first touch. Let's see if there are any limit sellers here wanting to bring the market down a tad little bit and trap the bulls. Good close. So bulls are still trying to get to the new highs. Somewhere around 42.19, 42.20 area, like I said, they're eyeing before perhaps because up on this, down on this, maybe up on this, down on this, and they're trying to get final push. But there are sellers stuck underneath 15, selling at this high. They want market to come down here so they can exit. It's also expanding triangle, so it could be final flag. It needs to come down here, and it will. Bears still want their let's see. They closed. Yeah, look what they did. They want their 10 point, so they're gonna sell here. They're disappointed. Okay. Actually, they could not close a 6 point. That's why it went up. So they're selling here to break even. 275 to 0175 is still target for bears. The reason why this went up, that body, both, look at 15, did not close, okay, at 6 point. Hold on, am I measuring this? Yeah. So that means they sold scalp about 5 points, an extra couple of ticks, but they couldn't. So anybody who sold underneath for 15, disappointed, they're going to sell here. Market is still trying to close right around here a bear body. If they do that, then we could quickly go to the 9 point, okay, or 10 point and take profit. I'm going to mark it just in case. That's the 9 point. Happens to be 275. Let's see if the bears can actually do this. Target is again 275 is to 175. But bulls are strong. This is nothing but a fix the problem and exit out, because this could go higher again. Except that it is I'm going to take it from there. Some kind. Oh, I'll take that. We might end up actually testing the 13 low, which happens to be in the 10 point zone. Can they fail? Well, if they cannot close that bear body underneath 6 point, they will never get here, nor here. Okay, so all because bar 15 body did not close where it's supposed to close. One tick failure. That's why it's struggling. But bears did come down to where they sold, one tick below 15, so they might be exiting out. That's why we're stalling here. It's making a decision. You see how all that worked out? Machines figured it out, and so we can actually continue higher perhaps. Market is still trying to get to 42.15, one tick above. I'm not so sure if I'm actually measuring right. Hold on. Yeah, 15.50 and a one tick above possibly, or 15.25, 15.50 is bulls trying to reach, because ton of bulls are stuck there. If these bears exit out, because they already fixed their problem, that means is we may not be closing underneath this pink line to get to this pink line. And bull trend resumes. Okay, terrible bar, terrible close for bears, but let's see if there are any limit buyers at the midpoint. Yep, they didn't have to get to the midpoint. That's high 1, 16 is, so they're trying to get a high 2 above 17. But it really extended. So the target is 42.12. If they can get above 42.12, they can continue to go higher to 15.50. But it's really sideways, so there's a small trading range. Some bears are still trying to manage, sell the highs, and trying to break even. We will eventually pull back to 41.95 area, even. Be prepared for that. But as new bull bars are closing, that's going to be recalculated, and I'll tell you when we start to sell. Right now, 41.9425-ish is the deepest pullback we might do, but 41.9850 is the average pullback we might do and still buy again. It's very overbought to me. It needs to come down a little bit. Bears are disappointed, but the bulls have not made a new high. So because they haven't tested the bar 15 high, bears can still sell this and go for suddenly we get a big bear bar closing below the 6. Expect this to be tested. Okay, so but right now it's still bullish. I mean, let's take a look at weekly bar is bullish. It's trying to reach this area. Its monthly bar is bullish. We know this is the target, this trend line. Bulls are trying to get there. So we could reach here, and finally, before coming down, we might reach this area. So market is still pushing. And one thing that I need to do here, we reached my measured move and we're overshooting. See this? This bull flag channel breakout. So I don't really care for this anymore. Or I can extend it. And here is my new measured move target. Right there. So the pullback can buy, and we could go there instead. Just trying to be. Here we go. That's the channel. Is where we could use this as support and get back up to here before we even have an attempt to come down. So market is very bullish. Brad would say, let it go, and get to its targets. Target is right here. Bulls trying to reach here, one tick above. That's not what I want to do. This is what I want to do. But pullback would be a better opportunity for limit bulls to enter because it's very climactic, it's very high, is risk reward is not that good if you're buying right up here. So we have not taken out, but we do have a double top here now. This bar went up, we did not take out that high, so bears are still trying. They want to come down to the 6-point area, but as more bars we add, it's getting weaker and weaker. So I'm not so sure about the 42.0275 or 0.175 anymore. This is really weak for bears. Let's see, they're probably buyers here once again. I like to see more pullback to downside, but if they're not going to do it, I'm not going to force it. It's a trading range, and this is going to go into some kind of a trading range eventually, and then reach the EMA. EMA is catching up, okay? So, but it's been 19 bars, so we're probably going to try to trap. You got a spike pullback channel up. We're probably going to come down and test, and when we get to the EMA, whether it's maybe bar 30, maybe bar 40, I don't know. It doesn't have to be 20th bar or the 25th bar. This could keep going higher and higher, and by the time EMA reaches and we go higher, and then we come down because this is now a tight trading range, buyers are going to be there. So we could go higher and then come back. So this would be my target, 42.20 area, and we could trap and finally come down. But even if we come down, this area is going to act as support. Bulls are trying to take out the bar 15 high to eliminate this counter trend that the bears try to put in. It's still resistance here, and it might fail any second if we get a double top with bar 15 high, and then we could reach that 10 point. So I would assume we might come down and test the 4200 to 4195. 4200 to 4195. It's still doable as long as we do not take out the bar 15 high. You can see bulls are buying high ones. This is a bull trend, but it has to pull back at least a little bit. They can maintain this gap all the way to bar 40 to 50 before even touching the EMA, if that's what they want. Okay, so I'm expecting the 4200 test. If bear is lucky, it might even get down to 4195, but we shall see. Bears need a second entry short. Here, first entry under 15 failed. They're trying to get a second entry with bar 18. Can we get a quick reversal here? I don't know. It's still very bullish. Bulls have been buying every bear bar or underneath, but the moment we close below that upper pink line, we end up coming here, possibly even here. So I'm going to mark the average 10. You can decide to scalp 1 point above. I'm looking for bears to try to sell this, but it's still bullish, still buying. You see, that's machines just bought underneath 18 because that's what they have been doing. They've been buying the bear bars because they want to get to the 42.20 area, which I said, like, I don't know, half hour ago, maybe. So you see, all right, that's acceleration. All right, that's good. Let's see if they can get to 41.99 maybe. I don't know if they're going to be able to make it. So 0.275 is still possibly the target, or 0175. That is the second entry for bears, so they might get continuation here. Limit order bears entered here. Now they have a bear bar. Stop order bears probably underneath 19, waiting to get filled. So we might get a continuation, at least the 10-point zone where bears are waiting. Is if it breaches the 10-point from 1 point under, which is 0175 to 4275, we could end up coming down to 4198 to maybe the EMA. I don't know. EMA could be target suddenly, but this is my target at the least, is or 1 point above. So I want to see continuation. Here we go. 0275, I'm going to scalp. I actually sold. I sold underneath 18. I added another contract underneath 19. I said stop order bears waiting there. I took profit. Now I want to get the full 10 point. See if I can get it. Okay. That was the second entry short. We might test 4198 and bounce, or even 4200 bounce. This is still very bullish. But first the 10 point. Leg 1, leg 2. We're in the leg 2, and there's strong 1, 2, 3, 4 bear bars. Expect continuation for full 10 point. That's it right there. Good job. I scalped that. But we can still sell and reach right here also. But this is where bears are going to take profit unless they take out this. If they take out this with a bear body, expect continuation. All right, so it's 11. I'm going to grab some coffee and be right back since I paid myself here. I want to celebrate with a cup of coffee. So be right back, everyone. And you can see they're all scalping, not just because I took profit. That's because that's a 10-point swing. And in a really strong bull trend like that, 10 point is a big deal, the pullback. But it weakens the bull trend, just so you know. So this bull trend slightly weakened here. We might get a third leg down. So that would be up on this, down on this, up on this, down on this, up. We might get it up and then down. That would give us a bull flag. And we may not even touch the EMA and maintain the gap above the EMA. Buy again, go up here, make a double top, neckline, major trend reversal back to EMA. Now, that will be a good sell. So don't be all excited about, oh, this is selling. We might end up at the EMA. That may not happen. We might still maintain this gap, okay? In fact, because it's a bullish channel and it's very climactic, first pullback will be probably minor and it will be bought. And we're going to try to get back to the channel high, which is 15 high. If we breach the 15 high, expect 42.19 or 42.20 to be tested again before we even have a chance to come down. So don't be so excited about it. If we do not get any close below this, we're not going to get to the 14, 15 point. I'll see when I get back. Okay, just give me 2 minutes, please. Be right back. Okay, I'm back. So the average 14 point bears managed to get it. That's their second leg. They might actually get to 15, but there's a fight over trying to keep that gap open. Actually get to 15, but there's a fight over trying to keep that gap open. Oh, that coffee, I think that espresso machine looks really nice. All right, instead of 15, I like to take profit around 14 average before it bounces. Okay. I did say that we're probably gonna pull back to 98 area. We ended up testing a lot more than that below. So is up on this, down on this, up on this, down on this, up on this. We might get that third push, but probably buyers waiting is at the limit buys at the 50% of this bar, or the 33% is Fed Mesta is speaking. So now what am I looking for? Well, I'm looking for a bull bar close above this. If they do close it, then they're going to try to get to the 10-point and 15-point above. Failure to close above that is bears can continue to come down and test the EMA or give us a double bottom. We are forming a trading range now. Is a bull trend or bear trend after a certain while is, it has to go into some kind of a trading range. And you can see that this is a trading range sign. So we're going to want to get back up to here. Okay, so even if this comes down, there will be buyers. Is 80% of the chance is we're going to get to the midpoint of that trading range and the 60% back to where we were before. So bulls need to show me that they can close above it. If they fail, we could come down here, test the 50% of bar 21 midpoint, because it's a range, and it's going to there could be limit buyers there, but if it continues to come down, we might get maybe a double bottom. I don't know. Bulls are trying to keep the gap open to EMA and then get back up here. That means that could give us a double top neckline, and eventually we would take this neckline with a bear flag or two. Can the market come down after going back up here 50% pullback? We would measure this leg and then decide then, but right now I want to see bulls take us back up here. They need to close is above bars this 6-point area first. Bulls are scalping 5-point here, and they're trying to get a continuation 1 extra point to start some kind of an early trend, counter trend. Okay. True. That means successful luck. That means we're going into some kind of a trading range. I am flat at the moment. Market is looking for limit order buyers at the 50% of that bar 21. Like I said, it's also the third leg down. Bulls are looking for a bull flag up on this, down on this 16, up on this again, down on this. Okay, so this is up, and now it's coming down again. All right, they did find some buyers here, but no bull bar. So if you're a bull and you are stuck above 16, you buy here, you're looking for a break even, right? So if you're stuck here, you buy here. This is your break even. Market needs some kind of a double bottom. I don't know if I want to buy this, especially above 22. It's a strong bear bar. You see, there you go. See what happened there? I said I wouldn't buy this. So it's better to wait for a double bottom form. Market wants to reach the EMA. It's a 20-bar gap. Buyers are waiting at the EMA. First touch, they might buy. Okay, so what you're seeing here could be a leg in a trading range. The last bear bar, bear stuck, selling here. This is where they're trying to reach bar 9 high. At the EMA, under the EMA, there are buyers waiting. It's better to buy the EMA is because that would give us a wedge, 16, 21, and possibly 23 or 24 is whatever that new low is. It needs to breach the 21 low. Or we could get a truncated wedge with a micro double bottom with 21 low at the same level. That would still be a wedge. Now, I think we will reach the EMA. And if we do that, I'm just going to get rid of this. Get rid of that. If we move underneath the EMA, it's because we have a really good streak. Okay, streak of is 1, 2, 3, 4, 5, 6, 7 bear bars. But it is also 1, 2, and 3 wedge. So I think the bulls are going to buy here. Okay, so I would not be so excited about a huge reversal that you're not going to get it. It's forming a trading range, and this is a leg in a trading range, so the buyers are probably here. Bulls want to keep the gap open still. So they do not want to breach above this high. Bar 9 is okay. They're trying to prevent this line reaching the side. They want another gap here so they can get back up to here. Then market will have a higher chance of forming a double top neckline and then sell maybe 50% into this bullish move, and then I would look to buy again. But this is why I'm not that bullish. I'm bearish, but it's a really nice streak. It's just looking for a wedge formation, 1, 2, and possible 3. So is buyers at the EMA. Let me take a look at the encyclopedia for you guys. And let's see, actually Brad updated the blog here. Oh, look what happened. Hello. Why are we coming down? Because bulls got their chance to exit out. You see that right there? Look at that. One tick above. It just went one tick above. If I said either the close of this bull day or one tick above, they're stuck. So this was their first chance to get back to their original price and exit out. Now, what can go wrong here? One may ask. Can we suddenly become double top? There's a wedge, double top, lower high, and sell 50% into this, leg. If we get a gap bar underneath EMA, but since this is 20 bar, gap to the EMA, buyers are here. Okay, so could be this. Let's see. Yeah, look at that, 33%. Can you guys see that? You should be able to. Happens to be EMA, buyers are there. Now, if we start to close a gap bar underneath EMA, then we would pull to the 50%. But you could see the first buyers showing up. We do have a wedge here, but really strong bear body. So if we get back up, there's a gap here, okay, bear gap. If we go up and we end up making some kind of a bear flag, we could still sell into this 50% after pulling up. Or if we start to close gap bars underneath EMA, we could find ourselves right here because of the strong. There's a gap here. There's a gap here. Okay, so they're trying to reach the bar 9 high, but I think the bulls are going to maintain that gap open. As long as it's open, we go back to the 50% of possibly this leg. Pullback would be around here for bulls. Or you can just measure this. Pullback would be somewhere here. First touch to EMA buying, and it's trying to get back up to here, or the 50% of this leg. Remember, this is now a trading range. 50% of the trading, 50% midpoint of trading range. 80% of the time is anyone who's stuck here will buy down here will average at the 50%. 60% of the time, we will get back after the 16 high to rescue those guys. Rescue. So just wait for the 50% pullback of that bear leg. You have an outside inside 21-22, so we have trapped the bears trying to sell is underneath 21, which is the outside bar. We'll want to get back and test the bar 21 high. Bar 21 high is where I marked earlier, where we end up going. Let's see if we can actually breach the 121 high. Bears trying to form an early bear flag, but I don't know, because 23 didn't really take out the 21 low with a bear body, so I don't know if they can do such a thing. Now, inside bull bar, as long as it closes on its high, okay, that could generate buyers one tick above, but let's just wait a little bit. Bounce is very weak, but we did bounce. So there are buyers, limit buyers making money there, except the buying against the streak of 1, 2, 3, 4, 5, 6, 7, 8 bars is difficult. But we don't know yet. There's still 47 seconds left for this bar to close. Now, target is always bar 9 high. Bar 9 low is the 50% pullback of today's range. And I'm only measuring from the bar 1 low. If we get a bull bar here, there will be bulls wanting to buy that and hoping to get back up to here again. In a bullish trend like this, you want to buy above a strong bull bar. The only thing that would upset me is, buying or hesitate me, I should say. It's just because of this tight bear channel that this bar is probably looking for another leg down. So, bull inside bar 24, but it didn't close with a strong bull body. If there's a strong bull body, bulls will buy above it. Wanting to get back to the 50% of this trading range now that we have. Sellers, however, waiting around 42.0350, so I'm going to mark that. Yeah. Somewhere around here where I said earlier is sellers waiting, so they might try to sell, or a little bit above. Bears want to double top with bar 23 high and a bear flag and sell, but bulls will probably going to buy above this bar. Wanting to get to the, if they can breach this without selling, their next target will be, that, or a little bit below. So somewhere in here, market is trying to reach. Bears want to double top, but it's not guaranteed because we're still bullish. We have to at least test the 23 high. So if we get this bull bar close on its high with a nice bull body, smaller upper wick, there will be buyers above that. Bull body, smaller upper wick, there will be buyers above that. Market wants to test the 21 high and breach above it. First, the 0350 we should be able to test is if we get above it a little bit, 06 is target, maybe a little bit below. That would be a 10-point bull swing. But we don't have a, let's see. This bar right here, 25, is trying to close. Bulls already made a 5-point scalp here. They're trying to get an additional 1 point and close above 6 point. If you measure from the low of 23, bar 23, that would give them, if they get this bar close, okay, at the high of 24, then they're going to get a chance to get to the 9-point or 10-point. So 42.05 to 42.06 is their target. But they have to close bar 25, 1 tick above 24 with a bull body. Breaching above it is not going to be, is not going to work. With a wick is not going to work. It has to be a body closing above 1 tick above 24 high. Yeah, a market is half day, is Remez. I don't know if you're in the trade room on Monday. It'll be halted midday, I think it's sometime around noon. So there's a little bit time to trade. I don't like to trade these days, so we are going to be off that day most likely. Let me see. Yeah, it's holiday, 29th, Memorial Day in US. 3 bull bars is bears will exit out if they need to get the 3rd bull bar. Now, bar 25 did not close where I wanted to close. That is not good news. But if the bulls can get this 26 bullish, okay, then that's 3 bull bars momentum, but stuck inside the outside bar. This could go up here and the bears could show up again, because bears want a double top with 21 high and get a bear flag. Okay, so, but we need 80% of the time we could get to the 50% of this trading range, which is right there. If you measure from there, if you measure from here, that's just a 1 tick above. So I think we're going to test right here. There are probably buyers above 25, like I said, wanting to enter and go higher to the 42.05 to 42.06 area. Bulls need a 3rd bull bar here, but 3 up is inside a bear bar. Could still create a bear body and sell, unless they start to sell right now. But we haven't tested the 21 high. I don't know how selling is okay here. I wouldn't sell here. You have to at least wait for a bear bar to close if you're wanting to sell. Buy orders did not get activated above 25 yet. It didn't go 1 tick above. So stop order bulls are waiting there. Bears disappointed that they couldn't test the 93.50. But that's because I explained that the bulls are trying to keep this gap open. There's 1 minute left for this bar to trap the bears and go and close higher. Or it's just going to close at the EMA. We're going to have 3 bars testing the EMA and we could still swing higher. Seeing the EMA and we could still swing higher. Right now we have 2, 23, and 24. We might need the 3rd test of the EMA. But the moment the bulls activate those buy stop orders above 25, is expect to reach my targets. All right, so some bulls will start buying here most likely. 3 bull bars, but one thing that these bulls are lacking here is that we did not breach the 21 high. Okay, so they're still struggling because bears want a surprise bear bar and sell. But 3 bull bars, that's momentum. I've lost connection. Did you lose? I've lost connection. So let me see where I am, because I'm in a trade here. It was chopping. Audio was chopping. Interesting. 4,250 is okay. So I'm not behind. Can you guys hear me? Yeah, I'm here. You can't hear me? Oh, you may be experiencing network connection difficulties. To improve audio performance, please do something. It said, but I couldn't see it. Can you hear me? I should be back. Okay, good, good, good. All right, back to making money here. I like to see bulls push a little bit higher here into the 50%. Oh, crap. Oh, sorry, guys. Didn't mean to say that. I'm losing things over here. Some applications are closing. I did get filled here. I hate when this happens. I was in a trade, but I got filled. Yay. So I'm good. All right, so you can see how this worked out, right? So L says, when you get a trading range and you're stuck up here, you're going to buy here. With that buy, you're going to reach that 80%, especially the gap is open. Now, 60% chance we get and test the 16 high. But this is 10 point right here. These bulls need to take profit here. So this is going to come down a tad little bit. You lost money during that 10 seconds. Oh my gosh. What'd you do? Don't be that dependent on me. Eventually, you have to fly from the nest successful. Like, okay, I can't nurse you for the rest of your life. All right. I know you're kidding. I'm just kidding with you. All right, so since there's not much time left and Brad's going to come in, I'm going to open up the question box here. But first, let me check flatten my. All right, I did really good today, except one account. It's almost half of the little bit. That's all right, not so bad. But just give me a second. You see, they're taking profit at the 42.06, so that was a good target. Can they continue to go high? Yes, they're going to have to test the 42.07, 07.25 and close a bull bar above it. If they're able to do so, then they can continue into the 42.09, 42.010, the high of 16, where they got stuck originally. That's where they might try to go. Okay, so, but this is where I took profit. Molly bar over here. Demonstration of, come on, it's not that bad. I'm sure he learned something from me. Are you guys saying I'm not a good teacher and you can't learn anything? Oh. All right, there are some questions. Can you break down where the first and second entry short is around that, cause that pulled back? Oh, you mean right here? Sure. I'm going to get rid of this for a minute so that the chart is clean. So we pushed, right? It's 1 up, 2 up, and a 3 up. Okay, so market climactic. It's not that climactic, but It's a really nice bull trend. So now is we look at bar 14, look at bar 13, look at bar 14. Bar 14 is signaling you there. Okay, it is not an inside bar for a reversal for sure. So we're not going to reverse. We actually went one tick above. But the one thing that has been happening, if you look at all these bars since bar 7, bulls have been closing above bear bars. This is the first time we are not closing above a bear bar 14. That started to signal me that, oh, okay, so profit taking began, and bulls are not that confident that they're not able to take out a bear bar high. That's the first thing I look for, okay? To the person who asked, I'm not going to say the name since Brad's doing that. I'm going to try to be respectful as well to your privacy. So therefore, this right here is failure to take out that high with a bull body, 13-14, started to signal me. But people bought above here and they want to make money. So you expect, because we made a new high with one tick with that wick, expect continuation. So bull bar goes up. Look, again, we make a new high. In the meantime, we are not taking out these lows. So we are still in the bull trend. We're making new highs and higher lows, higher low. When was the first time we took out a higher low? Bar 16 breaching below bar 15. So that is your first sell. Okay, so now what? Now the bulls got a high one, but failed. All right, so this is a pullback. Now this is the second time we're taking out a prior bar's low, 18, right? So that is your second sell, especially if the bar is a strong bear bar. What you can do is, if you want to really sell, you can trail a sell stop order as these bars close instead of buying. But you're in a bull trend, so the bulls are going to want to buy all the time. But the bulls are not doing here well, so it's 50-50. It can go up, down. I say it's probably some kind of a flag, and it failed. It did a quick breakout, but it failed. You see bar 18 is final flag, I said, broke out. So triangle, final flag. Went up a little bit, didn't take out that high. Now close 19. If you did not trail a sell stop order underneath bar 18, then you can sell the close of 19 or one tick below. Then you would go for those targets that I measured. Is that clear? All right, next question is, can you show me how you would draw the measured moves? Okay, so there's several different measured moves. So let me get this out of the way. All right, eventually market is going to want to come down here because there's still bears stuck unless they sold here and got a break even. I'm just going to remove it, but have a mental note there. That's support. Market wants to take out that high, wants to continue high. So market open. All right, right now we have a structure here. We're not making new lows. All right, so what's happening here is that we're taking out these highs. When you see two structural breakouts, you find the last impulsive bull move, which is right here, and you mark that very last, okay, bear bar. I'm going to do that here. Structural breakout, very last bear bar before the impulse move with two legs. This tells you there's evidence buyers are strong waiting and they want to swing high. So if they've been swinging, but this is happening yesterday. I'm going to get to that why I'm reading this. So they start a swing. Goal is to take out that high so they can get a measured move, structural measured move. But if you bought here, right? First entry long, second entry long, and we took out the stop above 64. That's a small structural move, right? So this is your 1-to-1, right? And this is your 2-to-1. Did market get to the 2-to-1 before close? Yeah, 2-to-1, and then it came down. So but it's not, it didn't go up here. So it's still swinging, but it made a wedge. Comes down and tests the 7D, and then tries to swing again. We're still in the swing. Now I have a structural possible breakout. What broke the structure? So to the person, I'm not going to say the name, to the person who asked the question is, look at here. Double top comes down. That double top is your structure. Which bar broke that? Hold on. Which bar broke that? Today's bar 1 broke that. Look at the body closing. So that could become my structural, okay, measured move target. Look at that beautiful test of it, and we came down. The other measured move target is this, is the structural one. Sorry. Right? There's a much bigger one, right? So double top and a bar 2. Bar 2 body took out this high. So I'm going to measure from there. No, that's not what I'm trying to do. Sorry about that. You can either take this. That would be your measured move. And then I said, look for continuation. This is the actual one, this way. Okay, so we got there. Now the other one, at the open, I look for it. If I see consecutive 2 bull bars or consecutive bear bars or 3-bar breakout, I call it. Okay, so this is what I look for. 1 bar, well, we're already breaking out, and another one. And there's a gap. So this is my measured move. Look, we went above it before coming down. And then broke again. So you can also measure the leg, right? So here's a bull leg. Maybe I can take the whole thing. That will be your measured move, okay? So this is how I look for continuation. Anything that goes above is no longer my concern unless I'm point counting to maximize my target reach, right? So there's another one right here. Structural breakout. If anyone sold here, their stops are being picked on. Take that. That's a measured move, right? So there's a structural breakdown. Bears took it. So there's a bear body closing. I'm going to take that. That's a measured move. Or if you put your stop there, that is your measured move. And we just met right at the, maybe right at the dot. I don't know. So you got the point. So you don't need to count points. You don't need to do anything. You can just use the measured moves and get 1-to-1 targets. And here is, if you're selling, where's your stop? Above this lower high, right? So, and bulls are, I said, any inside bar, if it closes bullish, they will buy. So they're going to put a buy stop order above 24, or they're going to wait and buy above 25 because body is not all that stellar. But bulls took out, and they might be wanting to get up to here, in fact. So pull back, they could buy that pullback and get there. 1050. Make sense? All right, so I'm going in the order. Do I have time? Yep, I have a little bit more time. There's a question here. What was the probability of a short on bar 15 and how it changed on bar 18 is 19? Well, I kind of explained that. So I saw that it's the first time bulls are not able to close above it. And you're kind of reaching a third push up. Okay, so you gotta, you can see it's going up there and then is coming back, slamming down. Another bar that is not taking the prior highs with a bull body. Bar 16 tried, again, failed. And during the live session, I explained what's happening here. I measured, explained all that. And I said, we're getting to the bar 18, is because we're not taking these highs and the bulls are trapped, they're buying the lows and breaking even. So is, for example, if you're a bull and you got stuck here, you're gonna buy again somewhere around 16, right? Maybe what I do is I either buy at the close, open, or around the 50% of that wick of 16. And then I try to break even as fast as possible, okay, or where my original entry. And then bar 18 and 19 actually test, but they close bearish. So now I can see bulls is losing their probability, diminishing to make a new high and continue upwards. And I said we're getting to the 20 bar gap, is we need to pull back to EMA somehow and find average entry, and the bulls can try to swing again. So you have 1 bar, 17 bear bar, but it's extremely weak. It's basically a break-even bar. But then the bears close a bear bar. Generally, when I see these pin bars, I try to see if there are any buyers at the 50%, limit buyers. Some did show up, but the bar closed bearish. That tells me I'm looking for a second entry short here. That's what they're trying to get. So I said it's too hard, nosebleed. Chances are they're going to start taking profits, faster acceleration 10 points down. Plus around 18 bar, you want to see some kind of a reversal attempt. So that's what you're getting there. And they sell leg 1, pull back leg 2, or leg 1, pull back leg 2, pull back leg 3. It's a wedge bull flag. And the first touch of the EMA, you can see bulls were able to close 23. A little bit bounce, but it's a really strong bear bar. Anyone who sold the close, okay, it's going to sell above it again. So 24 comes down, but it closes bullish. Every other bear is going to exit out. It's an inside bull bar. However, it is a bull body, but it's a weak bull body. I said I don't want to buy above it, but if I do see a strong bull bar, I am going to buy it. And I'm going to expect a 80% chance of pull back to the 50% of this trading range, and I'm going to take profit, and that was a higher chance. Now, with this pullback, we could still go up 60% to here. It's possible. I just need to see bulls show up here. Okay, so we'll see. It's not ready to have a major trend reversal. I'm not expecting a major trend reversal, but if we start to, what can go wrong here? Do we have a double top here? I don't know. I would not sell this. Somewhere 50% probably buyers waiting, want to get back up here. Now, if I see a double top and a failure to take out this high and a surprise bear bar, then we're going to take that neckline and then pull back and then sell, maybe into that 50%, which is the bar 9 low, happens to be the 50% pullback. Bears can do that. They just need to set up that double top. To me, this is still bullish, and it's probably going to want to get back up here. Can you please explain why you calculated points below that bar 35 and not above the high of 35? 35? What 35? I'm not on. 35 has not yet printed today. Oh, wait a minute. There's something here. Let me grab this link. I don't know what to do with this link. It doesn't work when I click on it, or does it? No. So is this from yesterday? Are you asking about yesterday's 35? Let's take a look. You mean here? Right there? Oh, okay. So that's got to be you. Okay, so let me take a look. I know Brad's supposed to join. Brad, if you're listening, if you could just give me 2 seconds, let me explain this right here. Up until 35 we have been in a trading range. You would assume that. But this trading range is also a triangle with the lower highs and higher lows. So price is squeezing, but it's in a trading range. So every time it gets up here, it's going to want to sell, and that's what they're doing, okay? Plus, these two moving averages are going, kind of semi-parallel to one another. When that happens, you want to see good bull bars, and you want to sell them. Is you want to see bear bars, and you want to buy them. Just like they did here, they did here, they did here. They even bought that, and then bought again. So why is bar 35? I measured from there. I measured two different ways, okay, from the pivot levels to see how much the actual move is, and then from underneath certain bars or above certain bars to see how much the machines are scalping, okay? So you have a leg up here, up on this, down on this, up on this, down on this, up on this. You have a wedge there, and if you actually go to a smaller time frame, you're going to see it a lot more clearly defined. Up, down is, let's see, up, pull back, and then up again. Okay, so it's there. It's not even that defined, but kind of got the point. I'll go to the 1 minute just to see if we get to see it a little bit. Yeah, see, it's up on this, down this. Actually, up on this, down this, up on this, down. You see that bar went below? That's your pullback. Even here, the whole area. And then the push, or 1 pullback, 2 pullback, 3. So there's a wedge there, okay? So what am I looking for then? Is failure. Well, we're testing the high, okay? So we have evidence why bears could show up here. What is the evidence? In order to find an evidence, say market sold before with 2 legs. If the selling is impulsive and strong, right, with consecutive bear bars without being broken, the legs without being broken with bull bars, hence 22, even that could be a 1 tick bear body, 24, 25, right? So we have an evidence there. In fact, that's leg 1, pull back leg 2, pull back maybe leg 3 even. So evidence says the upper 1/3 of bar 22, or is the last bull bar before the impulsive bear move starts, is your sell zone. So you expect twice selling from there. Now, you're looking for signal bars to sell. What does a signal bar look like? It could be a bear body like that. It could be a bear body, a doji. It could be a strong bear body with an upper wick, or at the least 2 types. It could be a 1 tick bear body, or at the least you get this bar 35. Now, why would I consider selling underneath? That is the first sell. Most likely it's not going to go fast because you're selling against bull bars with bunch of gaps, bull gaps. You might want to look to sell the second entry instead. But if you do sell, I'm going to start measuring to see how much the market is selling, or is it going to produce more than 1 or 2 points. First, I'm looking for 125. Okay, so at that time, ATR was, let's take a look, ATR was 412. Actually, yeah, it's 433. So then it went to 450. So if the ATR is 450, 435, whatever, basically it's telling you average 4 points or more. Okay, so it's 450. You're looking for 225. Market is telling you you're going to make a lot more than solid 1 point. Look for a 225. Look, bar 36 gets that, and then it gets even more. It gets 425, and it starts to buy again. Why? Is because the signal bar is all that not stellar. Now, these areas generally look for two try selling. Okay, it could be also two try buying, like this right here. First buy, second buy, and the second buy can be swing. So now I'm looking for another bear signal bar. I certainly do not like this bar. This has a bull body. I don't like it. But if I do sell underneath, my stop is here. I'm looking to swing. But this time, it's a second entry. I want to see a good bear bar. Bar 40 is not a good bar because it kind of closed higher, but it took out the bar 39 low. But it's signaling me. It's signaling me that bulls are not able to go higher and take this out or take that high. So we now have a short. So you can put a sell stop underneath 40 and wait to get filled. As this bar opens up here, goes up, gets the limit order sellers above 40, and then comes down and activates underneath 40 stop orders. It goes up a little bit, and your stop is here at this point. You're safe. Okay, even if you put your stop, you're safe. And it comes down. This is your swing. But the problem here is this. You got a leg up, pull back, leg two. That pause area is actually a buy zone. Okay, so you either do two things. If you're selling, you're going to take profit with 32, or you're going to measure, okay, how much the bulls move the market. Not good enough to start a counter trend. They start to sell from here. Okay, you could say, hey, listen, market moved 10 points plus extra point, and it is right in the area is leg one, pause leg two. This is a secondary buy zone. I better need to take profit here. I'm trying to swing this, but we may not break this because there's a gap here. Okay, so the bulls are waiting. They're going to try to stop. Okay, so that's where if you're selling, take profit. Now, say you sold here and this went against you, but your stop is already here. This goes above, you scalp, you're still holding. You can sell again underneath here, or say you sold here. Let me do this the right way. You sold here. Your stop is here. Okay. You scalp the 2 points, 4 points, whatever. You scalp as price gets to the 32 high. Okay. So you take profit there. Market goes against you. You're disappointed. But look at this bar. You put another, maybe sell order either there. I generally utilize the 50% of that wick. And then I'm down again. Now I'm coming down. Okay, so my stop is there still. I'm safe. Now I see more bears selling here with a stop order. This is great. I can sell with them either there, or the close of 41, but I still need to take profit. It's swinging, but it's swinging into support. Okay, so that's why I took this. I don't know if I'm answering your question, by the way. I just went on a tangent here. Did I answer your question? Did you get your answer? I hope you did. We can always take this conversation privately because I really need to get going and Brad has been waiting. Okay, so I'm going to stop here taking questions. Save your questions for Brad, please. I just don't want to take over his time. All right, you guys have a great weekend. I will see you guys probably, I don't know. Let's take a look at the schedule real quick. Okay, I'm back on the 30th, Tuesday morning, and then Brad comes in, and I'm on Wednesday, and then we'll have a new schedule for June. All right, bye, everyone. Have a great weekend. See you guys later. Happy Memorial.
Sorry about that, everybody. I had to address something for the moment that could not wait. So overall, we have a trend from the open, and right now we are testing the 518 close. It's this bull close right here on the daily chart, and you can see the closing price is 12 even, and we're testing it right here. So it's a possible wedge, rally to 29, pullback, rally to 33, pullback, rally to 37, but you're in a bull trend, and bull trends are always trying to reverse. So the bears, they want to double top with 15 and 36, and they want a major trend reversal. But when you look at this, ask yourself, do you really want to sell below a bar like 37 after 35 and 36? Probably not. Therefore, selling here is selling in a tight bull channel near the open of the week and near the moving average. The bears did a good job with 18 to 24. That's enough to make the market evolve into a trading range. But remember, a bull channel is the start of a trading range. So we can get 3 pushes up for the rest of the day, and then sometime on Monday or Tuesday in this case, sell off and form a trading range. What would I do on 36? The only thing I would be doing on 36 is taking profits. I think it's a little aggressive to be selling, but 37 is a credible higher high major trend reversal. So always in bulls, I think it's okay to get out below a bar like 37 because we could easily test the 30 low. I've got the question box open, so feel free to ask any questions. Okay, so here's a question. Is bar 5 a trade where you would generally use a wide stop, tight stop, and why? You know, bar 5 here, I was actually long, so I bought the close at 3, and I was too slow. I tried to buy more lower, below 5, but I didn't. So I just had one position, and I scalped out during this bar. But in general, for me, bar 5 is a high one buy, and it's an okay buy. But you need a wide stop. It's a small bar, and look what happened on 6. So if I'm buying above 5, I'm not putting a stop below 5. I'm putting a stop somewhere down here, and I'm buying more, ideally, below 5. So in this case, I should have bought more lower, but my target was a little bit down here. So that's how I would manage bar 5. Give me just 1 second. So we're at the target, the 518 close. We're around bar 40. 40, you often get a midday reversal. The bears want an opening. The bears want this small pullback trend to lead to a trading range. If you remember, small pullback trends, they often form this. So 60% of the time, you get a trend from the open. It's really more of a trend from the open than a small pullback trend that starts a trading range. So you have to wonder, is the market going to rally? We have a sideways. Are we going to do this and then get a downside breakout? That is possible. By the way, I'm going to look at questions here in just a few and answer a number of them. I'm going to turn off my screen for just a second. So for me, I would be out of shorts here. I'd be out of longs here. What about selling? I would not. I would wait to sell. I think we're probably going to enter a trading range. Trading ranges close breakout points. So for me, we're probably going to test the 32 high. We may get all the way back down to the 29 low. But for me, until the bears break strongly below the moving average, we're in a trading range. And I'm going to expect trading range price action. Okay, question. So bears who sold bar 22. So bears who sold bar 22 here. I would not sell bar 22. I think 22 is forming a micro double bottom. And whenever you have a tight channel or a rally that looks like this, the one thing you can be certain of more often than not is that the market's going to go sideways. So for me, I think there's probably more buyers down here than sellers. If I'm a bull and I bought the close, if I'm buying up here, let's say I bought the high tick or even the high tick of 15, and I buy more above a bull bar or maybe after 3 bull bars, look what happened. The market's allowing me out break even. Now, with that said, I do think there will be bulls selling out of longs here. My concern is open gaps. Open gaps. So for me, I'm going to draw that just as a place marker. But whenever we have open gaps, I always get really concerned about the possibility of the trend lasting a long, long time. It always looks like this trend, trends always look like they're about to reverse, and they can last really, really long time. So open gap here, open gap here. If the bears are all that strong, you have to ask yourself, why aren't the bears selling below bars? If we're at resistance, the close of May the 18th, this bull bar, if this is resistance, why aren't we racing to the downside? The bears have not even gotten one close below the moving average in 40 bars. So that is a sign that something is not quite right here. But anyways, back to this person's question. Let me pull it back up. They said, so the bears who sold bar 22, are they defending their position on bar 35? Yeah, so are the bears that sold below 22 here, are they going to sell more below a bar? Like, are they going to defend their position on bar 35? So I guess what you're saying is, if a bear sold below here, are they going to sell more up here? You know, they could, but the problem with that is it's selling a bull flag in what's either a bull trend or a trading range. And if it's a bull trend, the market can go a long, long way before it comes back. So to me, I would not be selling here and I would not sell here and sell more up here, because I think the stop is it can be very far away. Question, would you expect much in the way of a major trend reversal by the end of the day? The bears are trying to get a major trend reversal. And if the bears can increase the amount of selling pressure through here and close gaps, then they'll have a chance. Strong trend line break, good for the bears, but this is a 15, 16 bar rally, give or take, maybe a little more than that. But either way, it's about a 15 bar rally and it's tight. So I think the bears need a new trend line break and then a retest. But if we get a strong trend line break down to here and then maybe a retest, I think that the bears have a shot at a major trend reversal. What are the chances that we just go straight down and get to the 24 low? I don't think we will. To me, this channel is just really, really tight. And that increases the risk that we're going to go sideways for a little while. You know, here is a 15-minute chart. Let's just go to the ES. And for those of you that don't know, there's the question box in GoToWebinar, as most of you know by now. So ask your questions there, and I'm going to check them off one by one. But tight bull channel, so I think it's going to be hard to get a major trend reversal without getting a sell-off and then a pullback. So all of these sell-offs are probably minor reversals. Take a look at Icon. So for those of you that know Icon Enterprises, it's Carl Icahn's company. And anyways, it was at 50, and they pay a pretty high dividend. Yeah, I can't remember. I think the dividend might be 8% or even, I'm not quite sure. Or maybe it was 8. I'll have to look. But anyways, the dividend's pretty high. And anyways, they released a report saying that it's accusing Icon of it being a pyramid scheme, where all the new money being raised was being sent over to old investors. And anyways, it's at 50. And this week, maybe really the start of last week, it went from 50 all the way to here, and now it's hovering around 20. But anyways, these are always kind of interesting situations. You've heard Al talk about them. I mean, obviously, if it's a fraudulent company, that's a whole other issue. But it's interesting because in situations like this, you have to ask yourself, you know, if you're buying here, your downside risk is 0. And what if it goes back to 50? Now, this is a strong enough bar. It could take a long time. You know, it could be, as Al says, dead money for a while. But I always think it's interesting because a big bear bar, and how much lower is it going to go? I suspect it's probably going to go sideways for some time. But you do have the argument that if this is not a fraudulent company, then with the short sellers who sold here, and some of the people, one of the large groups that accused it of being a fraudulent company was short, and I think Bill Ackman at one point started hopping on the train of short selling. But if this is not a fraudulent company, what happens to the stock? Could it go back up to 50? Sure it could. So I think it's always interesting when you see these kind of situations, because your downside risk is small and the upside risk could be, you could easily get 1 or 2 times your risk. But again, it could go sideways for some time. So I think that's interesting. But again, probably going sideways here. We had the same thing with, pull up Macy's. Macy's, right when COVID started, it sold off to about $4.70, and everyone was talking about how Macy's was going to go bankrupt. And this is about October of 2020 here. And you can see it went from about $6 all the way up to $35. GE, obviously GE's done pretty poor for some time. And anyways, it used to be like a $4 stock down here. And if you look though, so it's a little bit different now. The price has been refactored, but if you look at it, the low of 2018 was $39.97. And here on 2020 and COVID, it went to $36.83. So traders had really went a little bit lower than that, but the point is it went $4. It went $4 against traders and went from 39 or 40 all the way up to 80. So a trader, Al always calls these hodl trades, but a trader could, in essence, they buy at 40, risking to 0. So they have $40 a share risk. And they've probably got, since it's probably not going to go bankrupt, they can probably make 1 times the risk. So a lot of traders, they buy here, they scale in, they scale in. For those of you that listen to Al pretty regularly, you heard Al talk about how he bought somewhere in here, he bought the euro dollar right at 1.000, so right around here, and then he scalped out. And he said his plan was to buy at 1, and he would buy 200 pips lower, another 200 pips lower, something like that. So again, probably going sideways in here. So what do you do here? I think it's tough. You can be long, stop below 42. These open gaps are a real problem for swing trader. These open gaps are problems for bears. Whenever the market's in a bull trend and you see traders making money, you always have to be a little leery. One of the things I like to do pretty regularly is I will take a chart, let's say, whenever I want to look at an inverse chart, there's 2 ways I do it. Sometimes I'll just pull up the SDS. It's an inverse of the SPY, and you can see, and it's an easy way to check your bias. So kind of check yourself. Bear breakout, strong sell-off, testing the moving average, but probably sellers here, and tight bear channel. And the reason why it can be helpful to do that is if you look at, I think a lot of traders, it's really natural, especially with the overall, markets being in a bull trend, it's natural to have an upward bias and be biased to the downside. So everything is, if it's selling off, it's a buy. And it's, so it's easy to see markets in bear trends and be like, oh, it's going to bottom, it's a sell. Well, not really. It's 4 or 5 consecutive bear bars, it's probably going to go sideways to down. Here, it's easy to look at that and say, oh, the market's at a discount, when really it's a bear trend. And one of the things I'll do pretty regularly, I think it's just good practice, is I'm going to show everyone how to make an inverse chart for those that do not have NinjaTrader. I know several people have mentioned that on NinjaTrader you can mirror image a chart, but unfortunately I do not think you can do that on TradeStation. But what you can do, it's a little clunky, but it at least works. You go to Style, Candlestick, and I'm going to change, I like black and white bars, so I'm going to change an up body to a white bar. I'm going to change an up body to a bear bar and a down body to a white bar. And I'm going to enable an outlining. So up bars are bear bars, up bars are black, down bars are white. So it's backwards. Then what I'm going to do is take a screenshot of the chart. Let's just use the E-mini, for example. I'm going to take a screenshot of the E-mini. Like so. Then I'm going to open up a Word document. Here's a Word document. I'm going to paste it. So I've pasted the chart. I'm going to flip the chart upside down. And then I'm going to drag it from this way to this way. Now you have an inverse chart. Now, if someone actually knows on TradeStation an indicator or how to build an inverse chart, I'd love to hear it. I do not know. But anyways, big bear bars, second leg down, tight channel. And remember what I said. We have open gaps. I'm going to make like a green box. So we have gaps here, gaps here. So to me, this is a risk of a small pullback trend. It's probably going to evolve into a trading range, but it is a small pullback trend. Yeah, I knew people were going to start saying that there's way, that's probably one of the people's biggest complaints with TradeStation is everyone says TradeStation is kind of a dinosaur when it comes to some of the newer things you can do with other platforms. And, maybe that's just, I'm probably being stubborn. I like TradeStation, and I guess I've also liked it because I've used it for so long. I'm really used to charting on it. I like the way the charts look, but I'm sure there are much better charting platforms, and I'm seeing people in the comments saying that you can right click and invert the scale, or you can just hit the minus sign in TradingView. And it's just that's one of those frustrating things about TradeStation. I think it's a really good platform, but I remember Al would always complain about it, and I think it's dumb too. But they have a watermark feature, like right here. This was a big release, I think, when TradeStation, this new TradeStation platform, it used to be, I guess it's the TradeStation 11, but anyways, this was a feature they thought to add, and I don't understand why they would add something like this when, more people would much rather be able to invert a chart than to be able to see this very distracting watermark in the background. So anyways, I just think it's kind of, some of the things TradeStation does is a little ridiculous. So let's take a look at questions. Would you expect, okay, I've already answered that. Okay, question, do you sell here as bar 37 is a bear after a double top? Remember what I talked about here. These green boxes, I have these green boxes here as a reminder. It's like a big, flashing red light saying, danger, danger. You be careful about selling. We're probably going to test the moving average. You know that the moving average, there's a 99% chance you're going to get to the moving average and have at least 2 or 3 closes below the moving average. And it's probably not 99%. We've already touched the moving average, so that's one, check the box. And the danger here is if you're selling, you can get an upside breakout. So it can always, you can get a stronger breakout than you think. So if you're selling here, where's your stop? You put it at 42.20. You can, and it's probably okay, but the risk is big. And what are the chances it breaks to the upside and then sells off back to the moving average? We could also get a strong breakout and drag the moving average up a little bit. I still think we're going to touch the moving average. The last trade I took, I was going to buy the close 27, and then the next bar popped down. So I got lucky on my fill because I was waiting for a second, deciding whether I wanted to buy a pullback or buy the close, and it went down. So I got a pretty good fill, and then I got out somewhere up here. I didn't get out below I was too slow to move. I tried to drag my order down on 29, but it was too slow. I didn't get out below 29 because I thought it's a micro channel and there's worst case buyers at this breakout point. You can see what happened. Bulls at the 26 high, they sold the 26 high, trapped on 27, and then they used the pullback on 28, and they tried to get out. Excuse me, I said bulls. Bears tried to sell the 28. Excuse me, let me back up. Bears tried to sell the 28 high here, and they got trapped on 27. Give me 1 second here. So anyways, bears sold the 26 high here. They got trapped on 27, and then the pullback on 28, they tried to get out and they couldn't. So I thought here on 29 that the worst case, the sell-off would retest the 26 high and bounce. But I haven't done anything else. I think it's just, I want to buy at the moving average, and I don't want to buy far above the moving average. Okay, question. Now this is a good one. By the way, I've said it before, one of the reasons why I like the questions being answered in the GoToWebinar is, one, it's easier for me to keep track of them because I can hit the trash can icon after I've answered it and kind of check them off. But another reason is I think I'm hoping it entices people to maybe ask more questions that they might be, for lack of words, that they might not ask in the Discord, because obviously when you ask it in the Discord, everybody knows the question you're asking. So my hope is people will ask more honest questions. My thoughts here on 44, same as prior. I think we're going to test the moving average. Question, hi Brad, I find I have a hard time trusting myself and trusting the patterns. Do you have a similar struggle? If so, how do you work on it? Yeah, I've certainly had those struggles, and even it's easy to get into a rut or lose confidence in yourself. I can't tell you how many times it's happened to me. One of the ways, there's two things. One, you have to get to a point where you can actually read the market. So you have to ask yourself, and this goes back to the being honest. Al said two of the most important traits of a trader is honesty and persistence. Persistence is obvious because you have to persist and you have to work hard to learn how to read a chart. The second is honesty. You have to be honest with yourself about doing the right thing. Are you doing the right thing? Are you being, price is truth. Are you looking at the chart and responding in the right way? So the first question is, you have a hard time trusting the patterns. What I would ask is, are you recognizing the patterns? And the way you do that, first, you have to be able to see the chart and all the patterns at the end of the day. It always starts with that. You got to be able to see it in hindsight. If you can't see it in hindsight, you're never going to see it real time. But eventually, if you can start to see things in hindsight, you can practice seeing it more real time. But, the good news with all that is the longer you study trading, the more you look at charts, the easier it gets. Why do I keep saying possible small pullback trend? Because I've been the bear, or the sucker in this case, who sold below 29 and got stopped out. I've been the bear that sold below and used to stop all the way up here. And before you know it, the market keeps drifting up. And, you look at yourself and you say, you idiot, you sold a small pullback trend, and that was the worst thing you could do. And you look at the chart at the end of the day and you just feel completely stupid because it's a big bull trend bar. But that just takes a long time. Experience is the greatest teacher, and you have to learn from mistakes. But going back to your point, your question about trusting yourself, the first thing is, are you trading too large? So for me, if I ever get in a rut or if I ever start to lack confidence in my ability to read the chart, what do? The first thing is I always take a look at my position size. Am I trading too large? Am I too emotional? Is there something going on in my personal life that is causing a conflict with my ability to objectively look at a chart? And if it is, I have to find a way to calm that down. Maybe that means not trading. The other thing is you have to learn that the key to trading is you don't need to make a ton of points. You just need to do the right thing. And I know we hear that 1,000 times, but it's just, you just have to brainwash yourself into believing that. But the way I look at it is, for me, what helps me a lot is building charts. I like to, that is something, and I really started doing it a lot this year, but that is something I really like to do. Like right here, this is, it's fun. It's just a way to kind of think about the market. But here is the open of yesterday. We gapped down, bars 1 and 2. And if you hear I'll often say 50% of the time the initial move on the open is a sell climax. And one of the arguments as to why is this is the Globex session. We sold off, and you can see we're testing the high of bar 1 here. So it's basically a sell vacuum test of the moving average. And here's a larger screenshot of this. So it's a sell off to the moving average. So anyways, this is kind of one thing that helps me just better think about the market. Here's a wedge, climactic on the third leg. Al always talks about that. Here's a parabolic wedge. This is the dollar yen on the monthly chart. So anyways, that's one thing that helps me. But what helps me a lot whenever I'm in a rut is go back to basics and just look at the market. So 45, I'd get out of longs. Small pullback trend, probably going to get to the moving average. I'm not expecting it to go a lot lower, but it could. And for me, I think the upside's limited without getting to the moving average. Okay, this person said, not a question, just thank you for the advice on trading small. I've actually made more by trading smaller lots and being able to keep the position until price goes back to entry. Yeah, again, when we trade large, everybody does it. When we trade large, we naturally panic. And I think that's just the key. Look at institutions. You can really, the longer you trade, the more you realize you can really do well trading small and scaling in and using wide stops. Now, ignore the scaling in using wide stops part and listen to trading small. So bars 1, 2, and 3, what does Al say? It's a breakout. Just buy the market, put a stop below, and just, if you have to, that's why I really like the SPY for most people. Just buy the close of 3 somewhere, put a stop down here or here, and just hold for 20 or 30 minutes. And you'll look back, it's kind of scary in here. But if you're trading 5 shares, who cares? I mean, if you get stopped out down here, you basically, you lost the price of a cup of coffee. But anyways, if you buy here, put a stop down here, trading a few shares, and before you know it, you look back and you say, wow, I've made more than twice my actual risk. And it's just so easy when you're trading too large. You look at 3 and then you panic down here and you just go, oh my gosh, this is going to reverse. I can't stay in. Or even the traders that buy here. If you bought here and just used, risk 1 share, put a stop down here and then buy more above the bull bar, you'll be amazed at how often you can break even on the trade. And again, the point by saying all that is to trade small. That is the key. Okay, so question. It seems like there's also an ascending wedge forming, which doesn't that actually mean result in a sell-off? Yeah, it's a wedge top. So you have wedge tops here, 1, 2, 3. Wedge tops are always forming in small pullback trends or type bull channels. And arguably, we have 3 pushes, 29, 32, 36. And we have a leg 1 down to 42, leg 2. And guess what? We're at the moving average. Now, is this bar strong enough for me to want to sell the close? No. 46 is a strong enough bar to make me say, yeah, I'm going to hold off looking to buy. But the reality is, if you buy the moving average here and scale in, guess what? You're probably going to make money. Some bulls, they bought the low of 45. They bought the low of 44, 44, 43. And they scaled in lower. And some of those bulls might be disappointed enough on the trade that they will look to get out break even. Now, you also have a parabolic wedge, you have a wedge and it's nested. So you have 3 pushes, 1, 2, 3. That's the nested wedge. And then you have a larger wedge, maybe 1, 2, 3, or you can say 1, 2, 3. But when you look at this bar, this is what I was talking about. Why I was not interested in buying. This is becoming a fairly strong bar, and it makes me think we may try and go a little bit lower. But why not buy here? Why not sell the close of this bar? This is the risk you face. You're selling really close to a 50% pullback. And ask yourself, are the Bulls going to lose money if they bought the 45 low and bought more lower? Probably not. But you can see we did one thing good. We're closing this gap. So that is a sign we're in a trading range. So now we're getting more selling pressure. Remember what I said? I said we had a strong rally and then we had a trend line break. Good for the bears. We needed a retest. But to me, the retest from 23 to 37 is tight. So now we need a new trend line break, and the new trend line break is 46. Now, ideally, we get 1 or 2 bars down, and then we pull back. That would be good for the bulls. So again, I think buyers below. Why couldn't the bears close strongly below the moving average? And that's because they're not yet strong enough. And I totally get it. I keep thinking back to that person's question about struggling with trusting yourself. And, it's one of the worst feelings where you start looking at the market and you get confident in your reads. And then all of a sudden you feel like you can't read anything right. And it's truly a terrible feeling. But, the more you study, you just get more and more confident, and it gets easier, and you start to look at the market and understand, I've been one of those traders who sold the breakout on 46, and, now they're trapped, and this bar might be an inside bar and go to a new high. I've been one of the bulls who, panic out and start selling on the way down, when the reality is there's going to be bulls buying here, scaling in, and getting out. So it just takes a long time, but it gets easier. Okay, let's look at some more questions. Okay, question is, Brad, is bar 10 a high probability? Is bar 10 high probability here? I was worried it might have to test the bar 9 high. I wondered the same thing on 10. You can argue it's parabolic wedge, 1, 2, 3, but parabolic wedges are minor, and it's a micro channel. So even if we test the 9 high, who cares? Bears sold the 9 high, they scaled in higher on 10. They're trapped, which means they're going to buy. It's kind of like the opposite over here. So let me zoom in. I talked a lot about limit order traders, limit order bulls and bears. Look at the low of 45. If you bought this low and you scaled in, how are you feeling? So you buy the low of this bar, and then you see this. Well, let's say you bought more and you scaled in and you scaled in. You scaled in 2 or 3 times. Are you all that interested in getting out? You might just be wanting to get out, break even. But what are you going to do if the market gets back to your first entry, the 45 high? You're going to sell. And you can see that's kind of what happened here. The market started going up, getting close to the 45 low. And I said 45 high, I meant 45 low. If you bought the 45 low and bought more lower, you're going to be interested in getting out at the 45 low. And bears know that, so bears will sell. But anyways, I think we're going to the 45 low. And there might be more sellers at the 45 low than buyers. By the way, for those of you in the room, I'm hoping to do another Q&A, question and answer webinar over the weekend. So if you're in the trading room, it hasn't been set up yet, but be on the lookout because you should get a link if we get it set up. So the plan is to do one unless something comes up. But anyways, I'll post that in Discord or just check the Brooks Price Action website if the link shows up. But that would either be, if there's going to be one, it would probably be tomorrow, but more to come on that. Anyways, question about, bar 10. I think it's okay to buy the close and use a wide stop. What about buying above 47. I don't know. I think that's going to be a tough buy. I think if you're buying above 47, you're buying where the 45 bulls who bought the 45 low and scaled in got trapped. So really not all that ideal. But if 46 is a bull inside bar, you will have some bulls buying it because it's tested the moving average, even though it is after a big sell-off. So I'm leery about selling above 47. 10 seconds left to the close, probably going to close as a tail. Hi, Brad, can you talk about how price breaks out as bar 7? So now 48, it's an inside bar. It's a pullback from the low one short on 47. Probably buyers below 47. So you will have some bulls buying here, buying the low of the bar like 47, betting on a test of the 46 low. Okay, so back to the question. Can you talk about how price breaks out as bar 7? Is bar 7 here, then returns to the breakout point for retest and takes off on bar 8? Yeah, so what they're asking is a good question. What they're asking is, why does the market rally? So on 7, why does the market break above 6 and then pull back to the 6 high and then rally again on 8? If the market rallies and then pulls back, doesn't that mean it's a failed breakout? Well, that is due to limit order traders. If you're a bear and you sold the high of 7 and then you sold the high of 6, and then you look at 7 and you say, darn, that's not what I wanted. I wanted the market to reverse down immediately. So you sell here and you scale in. What are you going to do? If you're really disappointed on the trade, you'll get out break even at your first entry. And look what happened on 8. The market went 1 tick below the high, 1 or 2 ticks below, and then reversed up. And that happens all the time. So 46 is strong enough for a second leg down. This may be the start of that second leg, but I suspect there's buyers not all that far below. If the bears are lucky, they'll get a strong downside breakout, but again, tight channel. Until we get a strong breakout below the moving average, every time the market gets to the moving average, it's a buy. I took a buy. I bought below 45, taking a chance we closed the gap. I bought below, 47, the bull bar, taking a chance we closed the gap below 45. I'll be pretty quick to exit. Why did I take it? I thought for two things. One, it's an inside bar, and I thought 46 would get a small second leg down. And my thought is 45 low has trapped bulls. The bulls that buy the 45 low and scaled in lower in a bull trend or a trading range, they'll probably make money, which means we're probably going to get close to the gap. But when you're taking those kind of trades, most traders use wide stops and scale in. Question? Well, I'll cover that one in a little bit. That's more of a broad question about scaling in. Okay. Someone mentioned that they asked about bars 22 and 35. Let me okay, 22 and 35. Let's look at that real quick. So they asked about the traders that sold below 22, would they scale in more on 35? And that question was about yesterday. So, okay, if I'm remembering the question right, I deleted it, but they asked about traders that sold the 22 close here. Would they defend their sell and sell more in this area? And I think they would. What happened here, 21 is the same logic of what's going on right now. bulls buy the 21 low, they get trapped on 22, and they scale in lower, and they're sufficiently disappointed on the trade. What do you think is going to happen if we retest the 21 low over here? Traders are going to sell. So here, if the market, you have bulls who bought the 45 low, bought more lower, what are they going to do here? They're probably going to look to sell right around the low of 45. So I don't know if that answered the question. If it didn't, feel free and retype it in the question box. Yeah, someone asked, they recommended typing a minus sign in front of the symbol to invert it, and they said that works for Thinkorswim. I've tried that on TradeStation. Unfortunately, that does not seem to work. Can you explain open gaps and how you draw them? Yeah, so open gaps. First thing I think about with an open gap is, by the way, it's a micro double bottom, but remember what I said? So for me, I mentioned I'm long, and for me, my threshold for holding on to this trade is short. So in other words, this trade going up here, I'm going to be really quick to get out because I'm scalping out because I expect bears to be selling here. And I'm about to get filled, it looks like, but not quite filled. Anyways, in other situations like this situations like this, I am faster to exit trades and, take a break-even loss, get out with a small profit. And anyways, the buy above 48 is not ideal. It's a bear bar. We have an obvious gap here, so I think we're going to fill the gap. But for me, I'm less interested in buying up here I'm interested in taking profits up here because I know if I'm a bull and I bought the 45 low and scaled in, I'm disappointed. And because of that, I'm going to be quick to exit. So I just got out of the trade at the market. So it was barely 2 points. Maybe it's had more, but either way, not what I wanted. And, ideally, it'll probably close it. My actual risk on the trade was fairly small. So it's basically 1-to-1 on actual risk. And I was willing to scale in. But for me, we can go higher. We probably will. But I don't like big bars like that and then the market not racing up. So we're getting really close to this target. Will there be more sellers at the 45 low? Now you will have traders, bears, who will sell the 45 low in this area, arguably looking for a second leg down of 46. So the bears, they see a strong sell-off, and they look back at 45 low and they think, the last time the market was at the 45 low, we plunged for, 5 points. So maybe if we sell again here, we're going to sell off again. I want to fix the price scale. So anyways, moral of the story, gaps close in trading ranges. And we just closed the gap at the 45 low. That is not what I wanted to do. I'm trying to make the axis a little bit easier to see. Try 2 points. So, here I am. I got out early, and if I would have held, I would have made my target. But that's okay. The goal is to do reasonable things. Now here, we're at the gap, and the bears want a low too short. Some bears sold the high of 48, scaled in, so they may try and buy back shorts at the 48 high. I think 49 is strong enough that if I sold the 48 high, I'm probably disappointed. And because of that, there's probably buyers around the 48 high. So you have a low too short, and it's a low two, but it's right in an area where bears got trapped, bears that sold the 48 high and more higher. So you may have some buying in here. Other traders will look at this and say, yeah, it's going to be a second leg down from the sell-off to 46. So right now, it's second entry short. 47 is the first entry. This is the second. But I think the challenge selling here is you're selling right at the moving average. And that is not the most ideal thing. It's possible this is a major trend reversal, but I think probably more buyers below. Until we break far below the moving average, probably going to be in a trading range. You can see some buyers below 49. Some bears, they sold below 47 and they scaled them higher, and they're taking profits at the 47 low. I ended up buying a retest of the 48 high, and I bought more down here. And often when I do that, I'll exit part at the original entry. I'm taking a chance and seeing how this bar closes. So good for the bulls. Probably going to test the high of 49. Some bulls buy the close, they scale in, which means we'll probably try and get up to the high close or get close to it. Trying to break below the moving average. Still probably buyers down here unless the bears start to get consecutive closes below the moving average. Open of the week, not far below, so may have to test it. Bears trying to get a second leg down after 46. Getting to be a surprise, so may have a second leg down. Bulls, you'll have bulls buying below 46, trying to prevent the bears from getting the breakout. So the close of this bar is important. Will it close as a big tail, trapping bears? In other words, being two legs down, leg 1 to 46, pull back, leg 2 to 51. Or is this the start of bear breakout that tests down here? I think probably buyers somewhere in this area. You can see disappointment going into the close of the bar. But 51 is enough of a surprise that you will have bulls who bought and scaled in lower disappointed. Good close for the bears. Closed below the high of 46, but enough. It's disappointing. So I suspect not many bulls will be interested in buying this current bar if it closes on its high, but it can easily still lead to sideways trading. So the bulls, they want a buy signal in 2 legs down. But I suspect there will be more bulls using any rally. If bulls bought in this area here and scaled in, they will probably use any bounce to exit. But in the middle of a rally, so we rallied from the low of 23, high of 45, 50% is right here. And because of that, you have to wonder if the market is going to bounce here. So the bears want a low 2, second leg trap. The bulls want a second leg trap, trapping bears in the selling low, and the bears want a breakout on 51 and follow through on 52. Is the market always in short? It might be. I think the bears need probably one more bar. Typically, when you get a big bar like 51 in a trading range, we were in a bull channel since 24 up to here. We're evolving into a trading range. And whenever you get a big bar like 51, that makes you think the market's always in short. You always have to wonder if it's a trap. The market in a trading range, whenever the market's becomes always in short in a trading range, it's usually too late to sell. Whenever the market becomes always in long in a trading range, it's usually too late to buy. So in a trading range, whenever you see a big bar and you think, yeah, that's enough to make it always in short, it's often too late. We had some of that yesterday. We sold off always in short, but down here it's at these lows, and that's probably too late. We're always in long, clearly up here, but it's retesting these highs, and at that point it's probably too late. Now here the question is, this is a little bit better for the bears because you can make the argument that the market needs to get down to here, but this is the first time the bulls have been able to buy completely below the moving average, and because of that, you will have traders buying in this area. This is the first time the market has had a bar completely below the moving average in a bull trend. Therefore, there's going to be some traders buying here. So what do you do if 52 is a bull bar closing on its high? I would get out of shorts. It's a two-legged pullback for the bulls. Yes, you can argue that you have bears, you have bulls who bought the 50 low and scaled in lower on 51, and they're disappointed. But to me, when I look at this bar, whenever I'm deciding what to do in a position, I always think to myself, if I was neutral, what would I do? So if I'm long and I'm deciding if I should stay long, which I am long, I scaled in on 51. I mentioned how I bought the low of 48. I bought the high of 48, excuse me. So I bought a retest of the 48 high during this bar, and then I bought more down here. And I was deciding what to do. And one of the ways I'll do that is I'll think to myself, if I was flat and not in a position, what would I do above this bar? And to me, I always lean towards always in trading. That's always kind of the default. So to me, always in bears exit above 52, and always in bulls buy above 52. So to me, you will probably have traders buying above 52, stop below 51. And the bears, they want 52 to be a trap. They want bulls that bought in here to scale in lower and exit break even in here. Some bears that sold to close 51, they sold more above 52, and they're deciding what to do here. The bears are hopeful that 53 is going to be a breakout pullback short for the bears. In other words, it would be a low one short, but to me, low one shorts are generally strong in a strong bear trend, just as high one buys are good trades in a strong bull trend. High one buy on 5, 3 consecutive strong bull bars, probably buyers above and buyers below. Low one short, if this bar closes on its low, probably buyers below. It's a bear channel, 2 legs down in a trading range. And usually when you get low one shorts in the trading range, they fail. Just as when you get high one buys in a trading range, they fail. So to me, I think we're going sideways in here. Now this is disappointing for the bulls though. If you're a bull and you look at this bar, 53, it's a weak entry bar after a strong buy signal bar like 52. And you have to ask yourself, if this was such a strong looking buy for the bulls, where is the follow through? Whenever you're taking a stop entry, you want immediate follow through. It's like 46. We triggered a sell below 46 and the market went straight down pretty quick. That increased the odds of the second leg down. Here, 26, we had a strong bull bar on 27, increased the odds of a second leg. Here, we're taking a long time for the bulls to get follow through. It's possible we have to get one more leg down to the open of the week, but if we fall below 51, I suspect there's probably buyers below 51. But if we fall below 51, I suspect there's probably buyers below 51. You can see some bulls, they bought at the moving average and scaled in lower on 51. They used the pullback here to exit at their first entry. So we've got about 45 seconds left. Let's see how this bar closes. One tick tail below 53. So it's good for the bears. So the question is, are there more buyers below 53 or sellers? I think there's probably more buyers, although the market may fall below 51. We may have to fall below 51 before reversing up, and it may have to test the open of the week. But to me, this is probably a bear leg in a trading range. It's possible we have an open gap, the low of 45 and the high of 49. And then we have negative gaps in here. So maybe the close of 47, the close of 52. We have not clearly closed these gaps. I suspect we will, but you always have to wonder if this is going to lead to an endless pullback. But to me, we're right at a 50% pullback from the rally from 23 to 45. We're probably going to go sideways in here. Bulls did a good job preventing the bar 53 from triggering. So when you look at this, is this the follow through you want to see after 51, the market becoming always in short? Of course not. And that's very common in trading ranges. Whenever you look at the market and you see a bar like 51 and you think, yeah, it might be always in short, you always pay close attention to the follow through. Just when you think the market's about to break to the downside in a trading range, it reverses. Just like in a trading range, when you think the market's about to break to the upside, it often reverses. So the bulls, I suspect the bulls will probably get back to the 48 high and maybe the close of 49. And we may try and test the 45 low, the original gap. Bulls bought the 45 low. It never closed that gap. And it tested it to the tick. It tested the low 45 to the tick on 49. But to me, the bulls may try and close that gap. So I think the choices are long or flat. I would not be short here. It's still a bull trend, which means we can break out to the upside. I'm still long, and I want to see how what 54 looks like. I'm taking a chance. I'm swinging half of the trade to see if we get to a new high, but I'm taking a chance to see what this current bar will look like. Good bar for the bulls. Probably going to go at least a little bit higher. One of the things in here, one thing to think about is we had a tight bull channel, and it's a breakout on a higher time frame, which means the first reversal should fail. So if we go to like a 30-minute chart, 30-minute chart is a strong breakout. First reversal down should fail. And that increases the chances that there's sellers up here. In other words, that the market will try and retest the highs. You can argue that we already tried to retest it over here. So next thing, the bears want a low too. So the bulls, they see a tight bull channel, disappointed on 46. They tried to sell it at longs on 49. And arguably that's a retest, but it may not be a credible enough retest. which means the market may have to rally back up to this area, 41.12, 41.14. But if it does, it will probably find sellers up there. But I suspect any of the bulls who bought up here and bought more lower are disappointed enough that if we do get up here, we're probably going to go sideways. So to me, bulls, can they buy above 54? They probably can, taking a chance we get a new high. But I suspect if the follow-through is not great, they will be pretty quick to exit. And it's already a little disappointing. We're 2 minutes into the bar, and we haven't really gone anywhere. Now, it's good for the bulls that the current bar, the open of the bar is the low, but we need to see more follow-through. Some bears, they sold the 53 high, and they are disappointed by 54, so they're deciding whether to exit back at the 53 high right now. Bears want a low 2 short, but it would be a bear flag following decent bull bars 52 and 54, which lowers the probability of a sell below 55. But low probability does not mean no probability. You can see market tested the 48 high over here, sold off a little bit. Some bulls bought above 48, scaled in lower, getting out break even. So this is an important bar. Can the bears disappoint the bulls and convince them to give up? Can the bulls disappoint the bears and create a bad low 2 short? That would increase the chances of some kind of measured move. So the bulls, if they're lucky, they want a bad low 2 in an upside breakout, a bull breakout of a bear flag, and a measured move up to this area. Disappointing for the bulls. Outside bar on 55 may get a small second leg down after 51. So the bear is trying to get the second leg down. Now it's a wedge. Can the bears get the bear breakout? They might. But let's see how this bar closes. So far, looking good for the bears. But the bears failed to break out below 46 on 51. And they may fail to break out below 51 on this current bar. They fail to break out below 51 on this current bar. So this is an important bar. Will the bulls get good follow through? Will the bears get good follow through? Or will the bears fail and the bulls get a reversal of 55? The bears are doing a good job getting more follow through bars below the moving average. So next, the bears need to get strong consecutive closes. They need a strong entry bar on 56. Otherwise, the bears that sold below 55 may exit their trade. They took a chance. They sold an implied low 2, low 1 below 53, low 2 below, low 1 below 53, low 2 below 55. They want a strong entry bar. Otherwise, they may give up. But here, looks like the bears are going to get their breakout. We still have about 20 seconds until the bar closes, though. So let's see how this bar looks. We're at the open of the week. Might find some profit taking for the bears. So that's the problem for the bears. It was the third leg down. So now we have a wedge bottom, 46, 51, and 56. For the bears, if they sell below 55, unfortunately, they have to probably exit on 57 or above 57. You have a wedge bottom at the open of the week, 50% pullback from the rally of 23 to 45. And now this is where bears probably get trapped. So that is the unfortunate reality of trading ranges. Trading ranges are always trying to get you to do the wrong thing. They're trying to get you to sell late in the bottom of the range below 55, and then you get a good entry bar and then an immediate reversal up because it's a wedge. 1, 2, 3. And that just takes a long time to get used to that. Whenever you have a third, in general, traders do not like to trade third legs in trading ranges because there's too much risk of a reversal. So to me, I think we're going to try and get to a new high of the day. Good bar for the bulls. So bears who sold the 56 high, they're probably trapped and they'll probably look to buy back shorts. This makes me think we're probably going to try and go a little bit higher. So targets, the May 18th close, the 45 low, and the high of the day. The bulls, they want trend resumption, and they might get it, but I suspect they will probably be disappointed up here. So probably buy the close, a little aggressive, but probably buy the close 58. And so far, looking good for the bulls. But the bulls, they need the upside breakout here. They have a chance. They have a chance to get the upside breakout and a test of the high today. I still believe that the bulls are going to be disappointed. And bulls that bought up here and bought more lower are going to be disappointed, and which means there's probably sellers up here. But we have a wedge bottom, so reasonable to expect 2 legs up. So far, good looking rally. Probably going to get above the high of the day. But the bulls, they need this bar to close on its high. It's important to be mindful this is the area where bulls started getting trapped. So 3 consecutive bull bars, assuming this closes on its high, probably buy the close, but in an area where bulls got trapped. And you saw how the market formed a tail above the bar in the final seconds. It's damaging the bull case just a little bit. So for the bears, you have some bears selling above 55, betting on a trading range. Probably going to go a little bit higher, but trading range day, or not trading range day, but trading range for the past several hours. And like I said, the bulls that bought around anywhere in the 39 to 45 area are likely going to use part of this rally to exit. Now, if you're a bull and you bought above 42, let's say, and you scaled in lower, or you held through the pullback to 57 and bought more higher, you might look at this and say, yeah, you know, this rally up to 60 is strong enough that maybe we're going to try and break above the high of the day. So some traders, they may hold on to part of their position. In other words, they may hold on to part, taking a chance we break to the upside. But the longer we go sideways in here, the more traders are going to look to take profits. By the way, it looks like the registration link has been created for tomorrow's question and answer session. That is going to be at 3 o'clock Eastern time, which is 1 o'clock Pacific time, tomorrow on Saturday. So obviously, for those of you that can hear me and have access to the trading room, you should at some point today, oh, sorry, I said 1 Pacific time, I meant noon Pacific time. When I think about Eastern, I'm in Central time, and I'm used to Pacific time being 2 hours behind me. But anyways, you should at some point, you'll see the link on the Brooks Price Action website. It'll be there at least sometime tomorrow, if not tonight. But anyways, just make a mental reminder if you want to. And the Q&A session will be recorded for those that are not going to be able to listen and can listen after the fact. And my hope with those is more or less, it's easier to answer questions when the market's not obviously active. So we're breaking to the upside. I'm still long, and I'm looking to take part off. I should have taken part off over here. I didn't. I thought about exiting, but the problem with, this is the classic problem with trading ranges. You get a bear breakout, and it makes you think the market's always in short. You see that, and you think, darn, we're going to get a downside breakout. But usually, whenever you see that and you think, I don't know, I think the bears need a little bit more, and they didn't get it. So here, I am taking part off right now, and I'm taking a chance that we break out to the upside. Now, typically, when I take part off and take a chance that we break out to the upside, I am fairly quick to exit the other piece. So I want a strong move. And if we don't get that, I typically take what I can get. Now, what about selling here? The reality is the bears that sell here probably will make money. However, you're selling in a bull micro channel and 4 consecutive bull bars, which is fairly dangerous to be selling. But anyways, my hope with the Q&A tomorrow is we can really kind of talk about the price action. I really want to talk more about always in. I think that is just a very important concept for traders to understand. So you can already see right here, this is a little bit disappointing for the bulls. We're starting to pull back. Why? Now, why? Why are we pulling back? I ended up just getting out of my second position. It's not breaking out like I want it to. And if it does break out to the upside, I'll buy again. Look to the left. You see 45, the low, and you look to the right. You look at that and you say, that's not what I want. So strong, for me, I'm not interested in selling yet, but I'm disappointed as a bull. And to me, we're in a trading range. We're not in a breakout. And what I mean by that is trading ranges, when you get a rally like this, it usually starts to go sideways. We've had a bull channel, we had a pullback, and now we're testing the top of the channel. We'd rallied, and this is 42.12. We rallied up to 42.12. We sold off. We rallied above 42.12. We sold off. We're at 42.12 here. So what are we going to do? Are we going to break strongly to the upside, or are we going to sell off? I think we're going to sell off. Now, the bulls have a micro channel, which means the bears need to get more selling pressure. So I think it's okay to be long. If I'd do anything, I would probably be long. And the reason I took my profits on my second trade, or the swing position, is I want the market to break out quickly, or else I'm going to get out. Because I know the odds are, if this is a trading range, we're going to get back to the 56 high. We're going to fall below 55. And I think it's really important to really practice not buying high when you think the market's in a trading range and selling low when you think the market's in a trading range. Those are two of the easiest ways that cause traders to lose a fairly good buying high and selling low in a trading range probably accumulates most of traders' losses. And if you can figure out a way to stop doing that, you're going to put yourself in a really good spot later on. Sometimes I've mentioned looking at the inverse chart to try and gather any other thoughts. So we had a strong sell-off, trend line break, and sideways. And when you look at this, the micro channel, that's good for the bears, but the bars are getting smaller, testing the lows down here, testing the stop entry buy right here. So to me, I don't know. I mean, it is probably going to go a little bit lower, but I think we're near the buy zone. What are the chances we get a measured move down, or in this case, with E-mini, a measured move up? We might. But, yeah, I don't know. I'm leery to sell. I'm leery to buy in this kind of environment because the bulls failed here. They failed in here. I think they're going to fail somewhere up here. We have tails on 59. We have tails actually on every one of these bars. So are we going to get a bull? It's basically a spike and channel. It's like on a 1 minute chart. Spike, pullback channel, or spike, pullback channel. Are we going to get a stronger breakout? In other words, a more climactic breakout here? Probably not. But again, I would not be selling in this. Still by the close, so good for the bulls. Probably going to go a little bit higher. But close to resistance, the high at bar 45. And it's okay to be long, but if you get a bear bar closing on its low, I think it's reasonable to exit. But it is arguably still by the close. But typically, whenever you get 5 consecutive bull bars in a 6-bar bull micro channel, usually the upside is going to be limited. And 61 is a bigger body than the prior 2 bars, which is a sign that the market's climactic. Bulls getting the upside breakout, so still always in long. I'm trapped out. I don't want to buy this high. And I suspect there's probably going to be profit taking up here. But I'm certainly not going to sell something that is this strong. So is this going to be a successful breakout and measuring gap that leads to a measured move up, or are we going to find profit taking up here? I suspect we're going to find profit taking up here. It's possible. We have targets above at 42.25 right up here. So we have the high of May the 19th. We'll get there eventually. There we are. That's May 22nd. There's May 19th. So we have the high of May 19th, which should be the right here. I don't think we'll get there. Disappointing tail. So for me, if I was still long, I would certainly take partial profits for sure. A good default whenever you're in a channel, whenever you get a new high, to take part or all off. But this is a problem for the bears. It's going to be hard for the bears to probably get a swing trade after this kind of a rally. High one buy, but body's getting smaller and probably profit taking fairly soon, but still too early to sell. The bulls, they want to get to the target above, but I suspect it's probably too far. Overall, I mean, the bulls have done a pretty impressive job with getting the rally here. And I'll talk about the daily chart in a minute, but it's really interesting how the bulls managed to, they got a rally up to here. They went below the breakout, the low of the breakout, which was May 16th, and then in 2 bars completely reversed it. You know, this is just why it's so important. Whenever you're in a trading range, you have to be really careful about buying too high or selling too low, because if you're not, you can take a lot of losses. So when you see a strong rally and you look to the left, be careful, because wherever you think the stop might go, like below this low or this low, we could easily fall below it as we did and rally. So this is strong enough to make me think, I think the bears are probably going to fail here and that the bulls are going to get a new high. By new high, I mean we're going to break above February 22nd, or at least try to. So we're probably going to break above May the 19th, and we're probably going to get above the February high. You've heard Al mention several times on the weekly and monthly charts that the August high is a magnet, and so far this looks pretty good. And when you look at today, when you look at the week on the weekly chart, we broke below this bar last week, broke below it, and immediately found buyers and reversed up because the channel up's fairly tight. So it'll be interesting to see, are we going to break to the upside? Are we going to get to the high of February 2nd? I think we're so close to it that the market wants to see what's there. Now, as far as getting to the May 19th high today, I don't know if we're going to do that. I think that's going to be fairly difficult to accomplish before the end of the day. And part of the reason why I think that is that this rally is a little extreme, and I think it's just going to be hard to get a measured move up without getting a pullback. My other thought, with it being an hour left into the close, one of my thoughts is that the market is probably going to have a hard time. This is a buy the close rally, but it's beginning well before 2 o'clock Central Time, 12 o'clock Pacific Time. And you've heard Al mention, those of you that have been in the room for a long time, and he says it in the course, and he also says it in the encyclopedia, whenever you get a buy the close rally that begins before 2:30, it will usually not last all the way until the end of the day. So to me, there's still probably sellers up here. Now, it's the end of the week. We could definitely get something surprising. So it's possible that we'll be unable to escape the gravitational pull of the May 19th high. But I suspect we're probably going to start going sideways soon. My last trade was buying in here, and I bought in here, held through that, and I got out pretty much all or most somewhere in here. Basically bought the lows of these and scaled in. But I thought about holding part, and in hindsight, it was a mistake. I should have held part here, but I just decided to get out because I think it's a trading range. And if we do get to a new high, which obviously we did, my thought is it'll be limited. So high one by 63, but if you bought above it, 16.25, the market it allowed traders to make 1 point buying above the high one on 63. So in other words, it went 6 ticks above the market. The entry price was 16.25, which means it needs to go to 16.5 to allow you to get out. Easiest way to do that is for the E-mini, I look at a bar and I just add 2 ticks to the high of the bar. So if I want to see, can bulls make a 1 point scalp? I think, okay, 16 plus 1 point is 17 plus 2 ticks is 17.25. 2 ticks because you need 1 tick to enter and 1 tick to exit. So if I want to see what a 4 point scalp would be above this bar, it's 4 points plus 2 ticks. So 208 plus 4 is 212 plus 2 ticks is 12.75. And you can see the market went 1 tick above and turned down. And you can do the same thing with 10 points. So 18 would be a 10 point scalp plus 2 ticks to enter and exit. So 18.75 is 10 points. And you can see we're not quite there. What about 9 points? that would be 17.75. So right now, the market's gone up 9 points from this low to this high. And if it's touched the entry price for some of those bulls. Now, more importantly, it's a bull micro channel and it's getting extreme. So probably going to find profit taking fairly soon. I'll answer some more questions here in just a few minutes. But for me, I'm trapped out. We have a wedge top and technically a bull breakout of a wedge. And while this can go on a lot longer, to me, I doubt it will. I want to take a look at, I'm going to turn off the window. I want to look at ticks really quick. So here is the tick chart. It is a comparison of the E-mini and then ticks on the New York Stock Exchange. So I'm sure someone can give a better answer to this, but the easiest explanation is every bar that's measured, if ticks are going up, that means the majority of stocks on the New York Stock Exchange at that moment are going up. And an easy measurement of ticks is if one side is well above, if one side's staying at 700 and not falling much below, going negative, it's a small pullback trend. So on the open, you look at ticks all the way to here. From here to here, the first 2 hours, the market went to pretty much the lowest it got was negative 350. Here it went to negative 800, which was a sign of strength, and that could increase the risk that the market may go sideways for a couple hours. But overall, the bears got decent selling pressure in here. You don't really have to look at that. I mean, the chart will give you all that you need. So right now, there's no reason to sell. We're still by the close and going higher, but it's also musical chairs. We'll probably go sideways, but I would get out below a bear bar and wait. So right now, you have 8 consecutive bear bars, and you have to ask yourself, are we going to get 9? And if we get 9, are we going to get 10? So to me, I think the bears that sold the 45 high and scaled in are probably going to make money. So you can see we went down, came really close to 45. Let's see, did we go below it? 1375 and the low was 1375. So we touched it and turned up. You know, it's really fascinating to see. Can the bulls do it? Can they get up to the May 19th high? I don't think they will. To me, you know, if I was a bull and I was long and now I'm getting a second chance to get out above the high of 66 or 65, I'm probably going to take it. So to me, I think probably going to go more sideways here. Okay, so I'm taking a look at some questions. Does the 20 EMA become a stronger magnet later in the day? I don't know about necessarily later in the day. I think it really depends more on if the market hasn't touched it. So like over here, I look at the EMA as kind of like a fair price, the average price. And the market is always trying to find the average price. You've heard Al say, the market's is always probing support and resistance. It's probing to see what's fair. And here, when you look at the moving average and then you see 3 consecutive bull bars, we're far from the moving average. But when you see this kind of a rally, you can justify buying far above the moving average because you're buying momentum. The market's going up, it's probably going to go higher. But then, same thing here. At some point, the moving average is at 41.9 and we're at 42.6. So we're 16 points away from the moving average. And it becomes a question of directional probability. What's the odds that the market's going to go another 16 points higher before it pulls back and tests the moving average? And that's why a lot of traders, when they see the market far from the moving average, especially for a certain period of time, they will be less interested in buying because they know the odds are it's going to pull back. But then, since the bulls were forced to buy above the moving average, let me restate that. Since the bulls were willing and happy to buy far above the moving average for 18 bars, what do you think they're going to do when the market allows them to buy at the moving average? They're going to buy. And then, obviously, that is what happened. But once the market allows traders to buy at the moving average, traders are going to start to realize that this price was above average, and they know it was above average, so they're going to be less willing to buy above average until there's a reason, such as something like this. Then traders willing to buy above average again, but now we're starting to go sideways. We've lost the momentum, which means we're probably going to go sideways and closer to the moving average at this point. Someone asked if I could share the template of the PowerPoint you use to make your encyclopedia of chart patterns. Yeah, the template, I mean, it's from the video course. So if you're subscribed to the video course, which if you're in the trading room, I would assume you've purchased the video course or else anyways. But if you go to the online course, click the Brooks Trading course, it is video. It's one of the bonus videos. If you click on bonus video, where is it? 5 steps to finding today's trades, video 13. And if you look at the bottom, you'll see Al Brooks' daily PowerPoint objectives. It's just a zip file. So anyways, you can click that and it'll give you, it's the PowerPoint. So I think sideways probably, I don't know if there's enough energy. I doubt there's enough energy to get all the way up to here. So for me, I can't see a reason why I would take another trade. So I'm probably trapped out for the rest of the day. Someone asked if I trade options. I do not trade options at the moment, although I probably will at some point. I just haven't felt much of a reason to yet. The primary main thing I trade right now is futures and Forex. Okay, here's a question. Brad, I hesitated to go long above bar 2. So they hesitated to go long here. Since I did not want to be aggressive, first 6 bars. Yeah, you know, I say in general, traders shouldn't trade the first 6 bars. And, you know, that's always context depending. And if you take it absolutely for heart, then on days like today, you're going to miss this. And, you know, that's not the end of the world if you did. But as far as in general, when I'm looking to trade the open, if the open is I'm assuming the open's going to go sideways. If we start to get 2 or 3 strong bull bars breaking out above the bars to the left, I'm more willing to trade. So for me, I missed bar 2. I was late to my computer. I bought bar 3. And I tried to scale in, but I didn't. And then I got out somewhere over here. But, you know, that it's okay to buy the close of 2. And if you're buying the close of 2, you just have to realize your probability is not, it may be as high as, it's reasonable to buy the close of 2. And, you know, it's a reasonable chance it's the low of the day. But on the open, if you have, you know, it's not far from the moving average. We tested the moving average on the open and turned up. So if you're buying bar 2, it's not a terrible trade. And then worst case, if bar 3 closes on its low, maybe you get out, maybe you hold. But I don't think that's a bad trade at all. But anyways, it just seemed like every bar was too high and too far away. So yeah, they had trouble getting long, and they said that it seemed like every bar was too far away from the moving average and too high. And that's what markets do. That's what trend from the opens do. They make it hard to buy because naturally, you understand correctly, the market should go sideways on the open. But the problem is it's not going sideways. And I understand the feeling completely. You just look there and you think, I want to buy at the moving average. I don't want to buy this high up. And these kind of days, unfortunately, if you have that mentality, you're just going to miss the rally. But again, that's certainly not the end of the world to miss the rally. But, that's also why I think a lot of traders should try and trade something like the SPY, the SPY if they can. Or if you're used to trading 5 or 6 micros, or 2 or 3 or 4 micros, trade 1 micro. In general, always have a position that is just the I don't care size. If you get stopped out for 3, 4, 5, 6 points, who cares? And because you have that position, you see the market going up, you just buy something. So if I was trading the SPY, I could see the market going up and just say, you know what, I'll buy 10 shares or 5 shares at the market, put a stop down here, and I'll add on lower. But at least if the market goes my way, I'm going to make something, and that will get you into the habit of buying and not being afraid to buy as the market's going up. But the key on how not to miss these kind of moves is have a small position, 1/10 the normal size, 1/20th the normal size, or 20% normal position size, or 10% of a normal position size, and just buy at the market. And again, for those that missed it, there's going to be, you should get an email on it, but I'm going to host a Q&A session tomorrow starting at 12 Pacific time, 3 o'clock Eastern time. So you can check the Brooks Price Action website, or you'll probably get an email sometime tonight or early in the morning with further details. So on the weekly chart, we pretty much closed as a bull bar. So good for the bulls. We're probably going to try and test up to the February high. Daily chart, strong bull breakout. Enough of a surprise. Probably at least a second leg up is likely. So that is good for the bulls. So on Tuesday, since Monday is a holiday, Tuesday, it'll be interesting to see, can the bulls get a strong upside breakout, or will this be disappointing? So coming into today, the bulls, bar 1 was a bull bar, and it tried to break above the high of the prior day, yesterday's high, bar 55. Bar 1, it's got a tail, it's a gap up, closing above several bars, good for the bulls, but in general, low probability buy on bar 1. Typically bar 1 is not the high or the low of the day. 2 consecutive bull bars. The market went up on 1 and down on 2, and now the market's going up on 2. So if 3 is a bear bar closing on its low, I'd get out of shorts. It'd be a 2-legged pullback. And then 3, another big bull bar. So by the close, breaking out of yesterday's high, 3 consecutive bull bars, probably unlikely to be a bear trend day, which means the day is either going to be a bull trend or a trading range day. Probably by the close, first reversal down, likely to fail. The bears that sold the 1 high likely got trapped. I'm pretty sure 2 went down and then went up. But anyways, if you sold the 1 high and you've scaled in, some traders tried to get out. Think about it. Traders sold the 1 high on 2, and then they were disappointed. They sold the high of the bar. The market went up, triggered the buy, but instead it closed above the bar. A lot of traders, when they fade a breakout, they fade the high of a bar. They do not want to see follow through on the next bar. So, in other words, they don't want the breakout to close above their entry price. If they sold the high of 1 and then 2 closes above their high, a lot of traders will try and exit at break even. And you can see on 3, there were so many traders that tried to buy at the high of 1, and bears included trying to buy back shorts. The market broke to the upside, so that's a sign of urgency. And then 4, we have a bear bar. It's a pullback from the 3-bar bull rally. Some bulls taking partial profits, but still by the close, traders likely buying more lower. 4, we have a high. 5, we have a high one buy. There might be sellers above the high one, but if there are, I suspect they're scalping and they'll probably get trapped and the downside will be limited. So for the bears, I would not sell above 1. I would either buy above 1 and use a wide stop or look to buy lower. So bulls will buy and scale in lower, most likely. And that's what happened on 6. We triggered the sell above 5 and we went below 5, but then bulls started buying. So now we have 2 legs down, leg 1, pullback, leg 2. It's an implied 2-legged pullback on a smaller time frame. 7, a bull breakout, breaking above 6. In some bears, they sold the 6 high during 7, and you can see they were disappointed by the rally on 7 that they sold, and now they're trying to get out break even at the 6 high, and that's again what happened on 8. The bears sell, they scale in or sell higher. Either way, they're disappointed with 7, and they try and get out break even at the 8 low. 9, bear inside bar, micro channel since 6. Probably buyers below. You'll have some bulls who bought the close of 8, disappointed 9, and will buy more lower, looking to get out around the high close. But I suspect that these traders are disappointed enough that the market's probably going to go sideways. 10, surprise bull breakout. Strong enough bull bar, probably going to go a little bit higher. Possible parabolic wedge with 4, 8, and 10. But either way, it's still probably by the close and traders scaling in lower. On some time frame, even though this is parabolic, it's a tight bull channel, which means probably buyers below. 11, consecutive bull bars, still by the close, but getting extreme. Typically, when you get a by the close rally on the open like this, the market will often go sideways for several hours. So still okay to be long, but better to use a wide stop. And if you get a bear bar closing on its low, it's probably okay to exit and look to buy lower. 12, strong bull bar, breaking above the open of the week. I say that. Open of the week is 425. Yeah, that's the open of the week. So we're breaking above the open of the week. Possible climactic bar, but after 3 consecutive bull bars and a 6-bar bull micro channel, still by the close and traders buying lower. But when you get a bar like 12, it's bigger than the rest of the bars, and it's a climactic bar. Increased risk that the market is going to pull back. So here's the bull channel. We have a bull channel and we're breaking above the channel. That is a buy climax. 13, we have a bear doji, sign of disappointment. Some traders buy the close of 12, disappointed 13, and they'll try and exit back at the 12 close, but still probably buy the close and traders buying more lower. 14, another bull bar. Whenever you have a buy the close rally like 12 and then you see a doji on 13, that's a warning that there's disappointment. And when there's disappointment, usually the market is not going to continue all that much higher. 15, a bear doji. 12 was a little bit climactic. In general, when you get a buy climax, either 12 or 10, 11, and 12, typically 60% chance you get a brief second leg up. So that might have been 15. 15, it tested the high of this over here, which I believe was the May 1st high. Now I'm kind of curious to see what it was. Let me just do this. Oh, it was the close of the 12th. It went right here. So anyways, that was the close of May the 18th, and it's reversing down. Probably buyers below 15 scaling in lower, but they may not come in until we get to the moving average. So most traders, I think it's okay if they exit below 15 and look to buy more lower. 16, we have a high one buy. Reasonable for bulls to exit above the high one. It's a high one after consecutive buy climax. Had to get a little water. It's a reasonable buy, but it's after consecutive buy climaxes, so probably sellers above scaling and higher. So for a lot of bulls, I think a lot of bulls will use 16 to exit more than to get long. And then 18, second entry short, a failed breakout above 16 and 17. Bear bar closing on its low, possible high for the next couple hours, or at least for a few legs. So for always in bulls, I would get out below 18 and wait to buy lower. 19, another bear bar, and then 20, an even bigger bear bar. Is it buy the close, sell the close? I don't know. I think it's probably still always in long, but after 3 consecutive bear bars and consecutive buy climaxes, I think it's okay to exit longs here. The reality is there's buyers below 12, buyers back to the 9 high, the 10 high, anywhere. And a bull that buys the 20 close and scales in lower is probably going to make money. However, if you're buying here, you have to be prepared to probably buy more at the moving average, which means you need a wide stop, probably somewhere down here. 21, sold off, got close to the moving average, but it's a high one buy after with a 3-bar bear micro channel and 4 consecutive bear bars, probably sellers above scaling and higher. So there's probably more sellers above than buyers. And then 22, we have a low one short, but at the moving average, so probably buyers below scaling and lower. Good bar for the bears, but again, probably buyers below. And until the bears can get a downside breakout in 2 or 3 closes below the moving average at best, the market's probably going to go sideways. This is a tight bull channel, and this is a trend line break, so it's a minor reversal. Most minor reversals lead to trading ranges or trend resumption and not trend reversal. 24, we have a bull bar. So the bears, they tried to make the market always in short, but 24 looks like the bears are failing. It's easy to look at the sell-off of 24 and think that the market's going to reverse, but the reality is this is probably close to the bottom. But with the channel down being so tight, there might be more sellers above than buyers. 25, another bull bar. You can see some traders sold the close of 23, disappointed 24, trying to get out at the low of 23. And then 26, we have an inside bar. 3 consecutive bull bars, probably buyers below 26, scaling and lower. And then 27, it looks like the bears are giving up. The bears tried to get a bear flag and a second leg down, and instead we're getting a bull flag. And because we're getting a bull flag, you have to wonder if the bears that sold the 26 high are now trapped on 27. And to me, if I sold the 26 high and I see 27, I'm going to be really, really quick to get out, because this could lead to a measuring gap and some kind of measure move up and test of this area up here. Follow through with the gap on 28. So the bears that sold the 26 high got trapped on 27, and they tried to exit at the 26 high during 28, and it didn't let them out. So you have a small gap. And now we have a bear bar closing on its low. For the bears, maybe a micro double top, but the reality is, do you really want to be selling after a micro channel since 23, and you're selling after 5 consecutive bull bars in a bull trend? While the bears can argue it's a lower high major trend reversal, that is just not enough. It's forcing you to sell probably low in the range, and the bears probably need to do more. The bears did a good job here. They did enough to make the market go sideways. They have not done enough to make the market a bear trend. 30 consecutive bear bars testing the breakout point at the 26 high. So for the bulls, they will buy down here trying to defend this breakout point. And then 31, bull bar closing on its high. The rally on 27 and 28 strong enough for a second leg. So 31 probably going to go a little bit higher. And then you can see the bears started giving up on 35 and 36. Bulls started buying. The bears tried to get a bear flag here, and instead they got the upside breakout. Now this is a tight bull channel, just like this was a tight bull channel. The bears got a trend line break, and they got a retest of the highs. So is 37 a higher high major trend reversal, or a double top with 15 in a major trend reversal? It might be. And the bears, they want a measured move down from here to here, projecting down here. But the reality is the channel up from 23 to 37 is tight, and that increases the risk that there's buyers somewhere below. 38, we have an inside bar, high one buy, forcing you to sell at the 15 high. Probably sellers above 37 compared to buyers. Probably sellers above 38. 39, we have a bull bar trying to break above the high of 15, but not yet clear. It's possible, because there was a measuring gap here, a breakout point that stayed open. You have to wonder if we have another measuring gap right here. So we have two open gaps here and here. They're negative gaps, but they're still gaps. And because of that, that will increase the risk. This is a small pullback trend. So if you're selling above 38, I would get out either on 39 or 40. Probably better to wait for more selling pressure, because the reality is we already have a measured move target of this. The next target is all the way up here at 42.20, and we could get there. 40, we have a bear bar reversing down, so the bears are making money selling above bars, which is good for the bears. Some bears that sold 37 right here, disappointed. They sold more above the bar, and they're getting out back to their first entry. And then you can see 41, the market rallied above the high close and turned down. So you have bulls who are selling out of longs at new highs instead of buying new highs. And then 42, we have a doji, 3-bar micro channel, probably sellers above. And we're breaking above. And then we have follow through on 44. But when you look at that, is that really all that impressive? Are you really excited to buy the close of 44? No, it looks like a bull leg in a trading range that has open gaps. So it might become a small pullback trend, but the reality is I suspect traders are exhausted from this, which means probably sideways. And then 45, we have a nested wedge. So we have a wedge, 37, 40, and 45, and then a larger wedge here, here, and here, or any of these highs, 1, 2, 3, 1, 2, 3. It doesn't matter. Always in bulls, I would get out above 45. Aggressive bears sell, but it's probably a minor reversal. 46 was a good entry bar for the bears. Any bull that bought below 45, 44, 43, or even the 42 low was disappointed by the sell-off, and because of that, they will use any pullback to exit their trade. We had a couple of those. That happens pretty regularly. Let me find an example. There's one I'm trying to think of in particular, and I'm sure because I'm thinking about it, I won't be able to find it. Yeah, I'm not going to be able to find it. 47, we have a bull inside bar. For the bulls, it's a failed breakout below 45. For the bears, it's a pullback from the 46 bear breakout. If I'm a bull and I bought below 45, I suspect that I'm disappointed enough on the trade that I'm probably going to be interested in trying to make the screen a little bit bigger. I'm probably going to be interested in taking profits. So for me, if I'm a bull, I bought here and scaled in, I'm either getting out break even or as close to this high as possible. So 47, probably sellers above, probably buyers below. 46 is strong enough for a second leg down. And 49 is testing the low of 46, but it's 2 legs up, rally to 47, pull back to 48, second leg up to 49. And then 50, we have a bear close. Reasonable on 50. For the bulls, it's 2 legs. For the bears, it's 2 legs up, and the bears want a downside breakout. For the bulls, they see a failed breakout of 46, and they see trap traders on 49, so they'll buy below bars trying to get out. But we have a open gap here, so the bears still may get a second leg down from 46. 51, surprise bar for the bears. Possible measuring gap or negative gap with any of these lows over here. We already have an open gap here, even though it's pretty much negative. Bear breakout 51, probably a leg in the trading range, but you always have to wonder if it might be the start of a bear breakout. Tight bull channel, 50% pullback right here. And then we have a really bad follow-through bar for 52. But some of the bulls that bought in here and bought more on 51 are disappointed, and they'll use this rally here to get out break even. 53, we have a low one short after 2 legs down, so there's probably more buyers below. And you can see it didn't even trigger, but then we got a second leg down on 55. 55, it's a low 2 short, but it's an outside bar. So it's not a great, it's a big bar, so big risk, which lowers the probability for the short below. It's also 3 legs down on 46, 51, and then if this bar breaks below 51, it'll be the third leg. And then 56 was a bear breakout, tested the open of the week. It was a possible measuring gap, but for the reasons I said earlier, it's a wedge bottom and it's the third leg down. So that increases the risk of the market reversing. But I thought at this point the market was almost always in short, but I thought the bears needed one more bar. Give me just a second. 56, we have a bear bar, but as I said, third leg down. And then we reversed up on 57. Trading range day, or trading ranges, it's common for the market to try to break out to the downside and then fail. And 3 pushes down. Let me just fix one thing. So 3 legs down, wedge bottom, but for me, trading in a trading range, reasonable for whenever you have a trading range and the market is almost always in short and you think the bears need one more bar, that is typically right before the market reverses. So to me, I was long during this bar, and I should have bought more below 51, but I didn't. I wanted to see the follow through, and then this bar was big enough. It was too close to my entry prices, so I didn't add on. But anyways, the point is, typically when you think the market needs one more bar, then that is a critical point, and usually the market reverses there. 57, wedge, always in bears, get out. Always in bulls, probably buy. Bad signal bar, with 56 being the bear. 56 is the signal bar and it's a bear bar, so it's bad signal bar. But still, 3 pushes down in an always in market, and we've not had that many bars below the moving average, so slightly probably going to test the high of the day, if not get close to it. So I would be out of shorts at this point. 58. Decent entry bar, but tail above, so a warning that the market may not go all that much higher. But if you're a bear and you sold the 56 high and you scaled in more higher, either on 58, what are you thinking? You now have 2 bars against you. So a lot of traders that sold the 56 high would be disappointed enough with 58. They would probably try and get out break even at the high of 56. 59, we have another bull bar, so you can see it tested the low of 56 here, or the high of 56. The high of this bar is 42.0775. The low of this bar is 42.08, so it missed it by 1 tick. Probably always in long, probably by the close, but you have a tail on 57, tail on 58, and tail on 59, forcing you to buy in the middle of a tight trading range. Not ideal. 60, we have another bull bar with a big tail. Testing the close, the May 18th close once again. It tested the bar 45 low. With this many bars up in a 4 bar with a 5 bar bull micro channel, probably buyers below scaling in lower. 61, we have another bull bar. Is it buy the close? It probably is, but it's forcing you to buy at the high of the range. It's okay to buy. And a lot of traders, if they buy, maybe they put a stop a couple ticks or a couple points below a bull bar, betting that if the market falls below a bull bar and bears are able to make a scalp below a bar, then we're back. We're not in a strong bull breakout. And then another bull close, 63, high one buy, but I thought probably sellers above and more sideways. However, tight bull channel, I would not sell above 63. 64, another bull close, but this is getting extreme. And 66, you can see it tested the high of 45. I mentioned it was buy the close, but getting extreme. And then up here, we tested the 45 high to the tick and then turned up. For me, if I was long and then I saw 66, I would sell above the highs and take profits, because once you see 66, it's a trend line break. So it's similar to over here. We have a buy the close rally. We have a trend line break. Once you get to a new high, you're probably going to go sideways. Buy the close rally, trend line break. Once you go to a new high, you're probably going to go sideways. And then we went sideways into the close. So for stop entries today, it's a buy above 2. You can buy above 4. And you can really buy above any of these bars. And then for bears, you can sell below 18, but it's not ideal. It's a bear bar closing on its low. It's second entry. I would certainly get out of longs below 18, but it's an aggressive sell and it's minor at best. Bulls probably buy above 26, 3 consecutive bull bars at the moving average. If they don't buy there, they probably buy above 31. Some will buy above 35, but I think that's pretty tough, forcing you to buy right at the top of the trading range. Bulls get out below 45, which means bears can sell below 45. Some get out below 37, but for me, I would not sell below 37. The channel up's too tight, so at best, probably sideways for the bulls. Some traders sell, but they'll probably scalp out. Other traders will hold for a second leg down, but pretty hard to hold through that. And what about bulls? Do they buy above 52? 52 is a little bit tricky of a buy. If you're buying above 52, you really need a wide stop, because you're buying just above the open of the week. You're buying in a trading range day, and 51 is a big enough bear bar that it'll probably have a second leg down. So if I'm buying above 52, I'm probably buying more at the low of 51. Other traders, if they buy above 52, there's a few ways you can manage it. So you can buy above 52 and put a stop below, and if you get stopped out, then you look to buy again above a bull bar, or you can buy above and use a wide stop and buy more below, but you have to trade smaller. The third option is you can buy a half size position above 52, stop below 51. Then if you get a bull bar closing on its high, you got stopped out here for a half size, you buy a full size position above 57, stop below. But anyways, I wouldn't sell below 55. Bulls can buy above 57. And there's probably no real good sells for the rest of the day. Had I bought above 57, where would I get out? I would, if you can manage to hold through this, I think it's really tough once you see 9 consecutive bull bars. It's just not that common. So for me, had I held through this pullback, I would get out at a new high or below 70 for sure. Limit orders. After 1, 2, and 3, it's a buy below anything. And up here, you can sell, but I think it's pretty difficult to sell up here. You have to be really quick to make fast decisions, and it's just really easy to get trapped, so I probably wouldn't. Better than not look to sell. You can buy below any of these bars, betting that we're going to fail at the moving average. Buy below the 21 low, the 22 low. Traders tried to buy below these lows, but never got filled. You can buy below 28, but that didn't work. Traders bought below this bar, 32. even traders buying below these bars. And then over here, I thought probably sellers back at the breakout point, probably sellers above 48, but probably buyers below here. And micro channel, you can arguably buy below 65, but not ideal. And that's probably it for the rest of the day. But, you know, when you're in a strong trend, you can buy for any reason. So if you're in a strong bull trend, you can buy below bars for any reason. For buy the close, sell the close, it was buy the close on 2, 3, really buy the close on any of these bars, buy the close of an 8, buy the close 10, 11. You can buy the close 12, but a little bit more dangerous. It's a bull breakout and it's becoming more climactic. And, you know, what about selling the close of 20? You probably can, betting you're going to get closer to the moving average, but I think it's pretty aggressive. And any of these bars are probably more buy the close than sell the close. Maybe buy the close 27, but you probably have to buy more at the breakout point, and it's at best a scalp. If you're buying the close of 27, the problem with it is you know a few things. One, you know traders got trapped buying somewhere over here. So you pick where they got trapped. You know, let's say traders got trapped buying anywhere in here. They bought the red line. What are they going to do at the red line? You know they're going to sell. Some traders even bought the 18 low and were testing it. That's an area where they got trapped. They bought, they scaled in. They're probably going to sell out of longs here. So as good of a bar as 27 and 28 look, it's more likely to lead to a trading range than a strong upside breakout. And then we went sideways, and then here, trading range, so it's really opposite. As it starts to go down, bulls buy. As it starts to go up, bears sell. Big bull bar, 51, but probably more buy the close. Big bull bar, 56, probably buy the close. Whenever you look at bars that are big and you can fade them and make a scalp, so bear bar, if you buy the close, you made money. Bear bar, if you bought the close, you made money. Bull bar, if you sold it, you made money. Big bear bar on 56, if you bought it and made money. That tells you you're in a trading range. And when you're in the trading range, whenever you have big bars that immediately reverse and give a scalper's profit to those that fade it, it tells you you're in a trading range. That does not happen in strong trending environments. Like over here. If you bought the close of any bar, if you sold the close of any bar, you had a lot of trouble making money. Let me take a look at questions. Is there a way to tell if this opening trend is likely to reverse in the first hour or a trend that could last for the entire day? Are there traits to show hint towards the development of these days? Yeah, so there's a few things. One is you can refer to the Globex chart. What do I mean by that? What I mean is here we have a breakout, bars 1, 2, and 3. And if we go to the Globex chart, let's take a look at the breakout of today. So what do we have here? We have an overall, let's just look at a higher time frame. So here is 1500 yesterday on the 25th. So here's the high. And you can see we had a trading range, so we had a strong sell-off, trend line break, we went sideways, and then what did we do? We got a bull breakout of bear flag. We're not quite at this target. But anyways, we're breaking out to the upside. So what you can often do is, let's go to a 15-minute chart so it's easier to see. So here is the report. We had this big bear bar during the CPI report, but look to the left. What's it doing? You had a strong rally and then a big sell-off. So it's testing an area where traders got trapped. Some bears sold the high of this bar on a 15-minute chart, 54.5. The low of this bar, 55.5. But nonetheless, this is the first 15-minute bar of today. And when you look at that, what would you do on this chart right here? You got a few options. You could say it is a channel, like so. So is that a channel? Let's just make a parallel. By the way, channels are never exact, but here's a line. You just draw it down here. Then look to the left. I just made a parallel, right click, parallel, dragged it up here, and that's a channel. But when you look at this channel, does this look like something does this look like it's going to fail? Or do you say, you know what, this is breaking above a lot of bars to the left. This might be a bull breakout of a trading range. And then you can see some traders, what happened on this bar? Let's go to a 5-minute chart. I used a 15-minute chart because it's a lot of bars and it's hard to see. But for me, when I'm looking at Globex, I'll often look at 15 and 60-minute charts because I'm not really trading in Globex. But if I want to look at the context of maybe the overnight session, I'll look at a 15-minute chart because it's easier to see to the left. But you can see if a bear sold this high, where my red circle is, my mouse, and sold more up here, that's break even on the entire trade, and it broke to the upside. I've got a couple of PowerPoints on this. Let me check something. I think I talked about this slide earlier today, but yeah, this was yesterday. We had a bear breakout on the open and follow through, but it was a gap up. So you have a gap up, so you have a bull trend. We rallied here. There's a gap. Gap means trend. Then we sold off. So it's a breakout pullback, buy setup, and it's a high one. Probably sellers above. Strong enough breakout, expect a second leg down. Is this the second leg? Probably not. But this might be the second leg. Now, you don't have to see the Globex chart, but what if we were looking at the Globex chart here? This is a 15-minute chart of the Globex market. And because of that, there we go. So because of that, we had a strong, actually this is a 5-minute chart. This is bar 1 and bar 2, but look to the left. It's a vacuum test. So, and there's several examples of this. Here's one. So this is this was the 14th, so 4/14/23, and we had a rally. So if you look at this day, I don't know what I just did there. There we go. Here, we had a bull trend and a strong breakout. Consecutive buy climaxes, 50% chance you get follow through buying and then a trading range. But if you look at this, if you looked at a Globex chart, this is what it was. It was 2 legs up and a second leg trap on the 15-minute chart. Here's another example. This is the 23rd of April, and this is actually the 5-minute at BS.D. So this is the day only. But you can see we rallied and then immediately sold off. And it's anyways, you can see on this chart, this was the context of the session, which I believe it was over here. So we broke to the downside and we're breaking out of a trading range. Here, this is May the 2nd. We have a tight trading range through here, and bar 1 broke below. This was the day where we had 25 bear bars below, consecutive bear bars in a row. And when you look at it, you think, how in the world did you know that, how could you tell this was going to happen? You had a very extended trading range in the Globex. Here, Globex can help determine probabilities. If you remember this day, this was May the 10th. We had a big sell-off and a very deep pullback and then a large 2 or 3 legs down. This happened right before the open of the U.S. session. This is a 15-minute chart. So we had a report 30 minutes, 45 minutes before the market opened right here. We had a strong report and then a strong sell-off. So bars from here to here is a deep pullback from the rally during the report. So this is a deep sell-off, and it's strong enough for a second leg down. But then you can see, because of the gap, we went a little bit lower, but we ultimately rallied. So if you were thinking about this chart, there's probably buyers below. This is tight enough for a second leg down, but there's probably buyers below this area. So bulls are buying and scaling in lower. I don't always look at Globex markets, but that can be helpful. So if we're looking at today, I mentioned, through here, that here's a 30-minute chart. This was the pre-market. We rallied. We basically have the triangle, so it's kind of like breakout mode here. So this is 50% probability that the market's going to break up or down. We broke to the upside. We tested the apex, and then we got a strong bull breakout above a lot of bars to the left. So it's a bull breakout of a trading range. So I hope that answers your question. But if you want to get more information about the context of the opening range, you can always glance at the Globex chart. Can you elaborate more on the concept of having 3 closes below the moving average? I've heard it here and there a couple of times from Al and Rose, but I don't get it. How do we use this knowledge? Well, let's roll back to what I was just showing. The first thing you have to define is, what is the moving average? What does it mean to have the moving average? A moving average is a support or resistance level. It's an average price. And if you think about it, a trend line and a moving average are really no different. A moving average is the close of the average X number of bars. It's the average close of X number of inputs. So we can make this an input of 5, an input of 20, which it is now. This is an input of 221. It's a 60-minute moving average, basically on a 5-minute chart. So what that means is it's measuring, it's averaging the closes of the past 221 bars on a 5-minute chart. But anyways, I view the moving average as an average price, just as if I'm looking at this chart, this is the Globex chart. Well, actually, this is not the Globex chart. This is yesterday's high. This is the day-only chart. We broke above yesterday's high and turned down. We got another close above yesterday's high. And now we have a third close above yesterday's high. If I'm a bear and I sold yesterday's high and I scaled in here or here, how am I feeling? I'm trapped. And if I'm trapped, I want out of the trade. I talked about that, over here. It's minor. But see this green box? I'm going to get rid of it, but see right here? What do you do if you sold the high of this bar right here, and then you see 27? How are you feeling? You're disappointed. So if you sold the high of 26, scaled in higher, and then you saw the pullback on 28 here and here, what are you going to do? You're probably going to buy back shorts. That's the same logic. We have that happens all the time with the moving average. So here we have a moving average, and we broke above it, but then we closed below the moving average. We got another close and another close. So now we have 3 closes, 4 closes, 5 closes, 6 closes below the average price of the past 20 bars. It's a sign of trending behavior. Let's find one where here's a good example. So we have a tight trading range here. We have a strong close below the moving average. Strong enough, it's probably always in short, but then you get follow through, and then you get another follow through. Now you have a bar entirely below the moving average. That's a sign of a strong trend. Let me show. I've got some examples. Hang on one second. I really need to organize these PowerPoint slides I'm making because it starts, I enjoy making them, but it gets to be a lot of slides rather quickly. And they're kind of, they're certainly cluttered right now because they're just more or less random thoughts I have. Anyways, the point I'm making is when you start to get closes completely above or below the moving average, it's a sign of a strong trend and trending behavior. Let me look at another question. We got a question on bar 72. Are we becoming always in short, or do we need a bull close below the EMA? So my problem with bar 72 is you have to think about time. So what I mean by that is at bar 72, what are the odds that the market is going to get, if it's always in short on bar 72, how much further is the market going to go? In other words, if it's always in short here, what's your premise? To me, on bar 72, it's 2:30 Central Time, 12:30 Pacific, or 3:30 Eastern Time. There's only 30 minutes until the overall market closes. And at that point, I think it's really challenging to get a reasonable swing trade. So if it's going sideways at that point, I would let it go. I know scaling in is discouraged to newer/intermediate traders, but at what point do you stop scaling in and take the loss? That really depends on context. So for me, it depends on my premise on the trade. So I bought as this bar started going down, and my thought was it's increasing in momentum in what's likely to be a trading range and not a bear trend. So it's either a trading range or a bull trend. But if we were to get a close, down here, 41.92, I would certainly exit the trade. It's a huge bear bar. Let me find an example. So to me, it depends on if your premise of the market changes. So let's say I buy the low of one of these bars here. And, or better yet, let's say I bought the low of 18 on this day. And I got filled on, say I bought the 17 low. I got filled on this bar, 37. It's not a great buy, tight bear channel. So let's say I bought it. And then I see this bar, bar 38, huge bear bar closing on its low. You can scale in lower, but at best, a bounce is likely and then lower prices. So for me, at this point, the game's over. And you have to find a way to just exit the trade. And then you get follow through, and obviously you get a deep pullback, but then it channels lower. So to me, traders, you have to be really careful with scaling in, because when the market gets a bear breakout, you may get a pullback, but if you're not careful, you'll end up buying all the way down, and then you'll take just a massive loss down here. And that's just something you can't do. So for most traders, they understand the logic of scaling in, but the problem with scaling in is the obvious. When you start to scale in and increase your position, the market is going against you. And if it's going against you, the risk can add up very quickly, and you can end up taking a much bigger loss than you think. So you have to trade really small. When you refer to a bar as a high one buy, do you mean a buy setup? With bar 16 and 22 today as examples, the buy is above that bar. Yeah. And they had a follow-up question. They said, let me re-ask the question. Al defines high ones as a bar with a high above the preceding bar. You refer to a high one differently. Well, bar 16 is a high one buy, yes. Bar 22 is a low one short here. The problem with buying above bar, this is a high one. The problem with buying above it is its consecutive buy climaxes, which increases the risk of a deeper pullback. So there's probably sellers above. Can you talk about today's inside bars and how you look at them? To me, an inside bar is a contracting range, and they often happen in trading ranges. So, for example, if we would have gotten an inside bar in here, let's say here is an inside bar, bar 9, it's a bear bar. In general, inside bars are trading range behavior. It's a triangle, but whenever you have an inside bar and the market is going sideways, there is an increased risk. Let me restate that. When you have an inside bar in a triangle, an inside bar is a triangle, but when you have a breakout, it's a flag. And whenever you have a flag, usually you get trend resumption. So here, this is a bull flag. Bull flags lead to trend resumption. Here's an inside bar right here on 24 after a bear sell-off, but it's at the bottom of a trading range. There's a greater risk of a reversal. All right, so that is all the time I have for questions today. If I didn't get to your question, feel free to check out the Brooks Price Action website. Again, there's going to be a Q&A session tomorrow at 12 p.m. Pacific time and 3 p.m. Eastern time. So ask any questions there, and try and comment in the Discord if I missed a question, and I'll try my best to remember to answer it there as well. All right, hope everyone enjoys. For those that are in the U.S., hope everyone enjoys their Memorial Day, and we will all talk soon. Thank you.